We're live.
Yo, dude, Hyperliquid all-time high, baby. Let's fucking go. We got 𝘗𝘯𝘁𝗏 on Twitter. Dude, so he puts out this tweet. And this is what we were talking about yesterday, right? Guys, welcome back to Rollup TV. Yesterday, we did a whole Hyperliquid stream. I'm Andy. It's Rob here. And we were talking about how this community aspect, Rob, has just completely shifted from like these. And I tweeted that it's these institutions lobbying to hype whales who are a bunch of terminally online DeFi gigachads. And here we have 𝘗𝘯𝘁 saying, hi, Hyperscan has $1.3 billion of the voting powder. Can you explain in simple cat terms so I know what you're trying to meow? On a quote tweet of the CEO of Van Eck, who's like 60 years old and like is probably like a deca millionaire and has like a 12-figure business. And then Moon Overlord responds in the first comment and goes, I don't like his attitude. Thumbs down. It's just like, what is the state of things, Rob?
Can you explain the state of things like a cat in cat terms, please?
I cannot, unfortunately, but that's why I am not a trillionaire.
I mean, I think look, 𝘗𝘯𝘁 is one of a kind.
Yeah.
Not every double-digit % of supply Hyperliquid validator is going to ask for an explanation in cat terms. CL is special, but
yeah,
I think like we were talking about yesterday, it's indicative of the cultural footprint of Hyperliquid. And if they're rejecting Van Eck, who obviously is one of the most experienced, not the most crypto native, but they have so much stature and legitimacy in the traditional financial world. At a certain point, they're going to choose one or the other. They're going to choose the traditional, corporate, experienced, and reputable entity, or they're going to choose a fly-by-night crypto native company that may not be registered in any jurisdiction, but they certainly have a digital identity. And so you're going to...
Dude, Cat doesn't even have a freaking... Cat doesn't even live in any place. He uses his friends' credit cards to live in hotels. He has zero footprint in the world and just bought a tank. And he give it to some girl.
Did they let him buy the tank?
I don't know how. Dude, it's crazy. Anyway, let's get the TLDR, Rob. I mean, who's in the lead? We had Ethena come out today as well as Sky yesterday, I believe. Today we have Vance from Framework coming on immediately. He will be the first guest. That's going to be awesome. Then we'll have Rune, the CEO of Sky Ecosystem. Rune is a great, smart fella. And then we'll have the USDTO lad Lorenzo. And he will be on to talk about his view as a validator. And yeah, I mean, we have a lot of interesting Hyperliquid commentary coming to you for day 2 of this special, Rob. So yeah, that's the latest. Ethena came in and Sky came in, and Paxos is updating their proposal as we speak. I'm not sure if it's been updated yet. There is a Polymarket out that says Paxos, I believe, is at 90% right now.
No, it's not.
Oh,
Paxos is at 3%. It's at 97% against. And this Polymarket actually looks way out of proportion.
Really?
Based on my eyes, yeah. I mean, look, I did say that I thought Agora was falling behind yesterday. They're at less than 1%. There's not a ton of volume here, but there's enough to go off of something. I also think it's worthwhile pointing out that the person who has the most bet so far and has commented has a username of Jeff's Scrotum. I have to imagine that is alluding to Jeff, the founder of Hyperliquid. And right now, it has native markets in the lead at 57%, Ethena at 39%, Sky, which is just listed in the last few hours, or maybe actually last night, is only at 2%, and Paxos at 3%, Frax and Agora less than 1%. This seems way out of the whack.
Well, is native markets winning? Is that the case?
Yep, with 64% so far.
But are you saying it's against or it's for?
For.
So native markets is the real winner. So we're going to try to get Max on. He's been hard to coordinate with, but we had a tentative time. Well, look, we got Vance in the back. Why don't we go ahead and bring up Vance? It'll be a great conversation, and just kind of lean into his idea for what he sees the future of the Hyperliquid stablecoin ecosystem being, which is he's obviously on Team Sky today as they've put out a new proposal. Let's talk all things Hyperliquid. Vance, welcome to the show, man.
Good morning, guys. What's going on?
Dude,
Morning. Welcome
public
to
forums are back.
What's going on? Yeah, no, we haven't
Public forums.
all the stable coins.
I mean, we had that layer 0 wormhole thing a couple weeks ago, which kind of was like, okay, DAO governance is coming back a bit, but now it's like, all right, we've got some of the largest DeFi protocols and institutions in the space bidding for a ticker in public. I mean, it gives you something to live for.
I know. Gives you a reason to get up in the morning. It's I mean, it's great to see everyone putting their proposals forward. I think no matter what, Hyperliquid has already won, and kind of whatever happens, Sky is going to be building there, and just the opportunity set has really been revealed to be massive. Like there's $5 or $6 billion of USDC in the bridge, and I think for a lot of startups, this is kind of a make or break moment. Like they either kind of get the 5 or 6 billion or they don't. But there's a variety of other players that, I thought the native markets proposal was really good. And that's kind of an option if you really want to be native. And I think, the framework for thinking about these things is you probably want someone that's either really aligned and native, like native markets, or you want the best absolute deal, which we think is Sky, obviously. But there's all this detail and stuff that's getting lost in the middle in terms of, even things like, okay, why should the stablecoin be Genius compliant? Are we sure we want to put all the eggs of the Hyperliquid basket, right there at this moment? And even for people who, I'm not going to disparage the other contestants as I tweeted, but people that are just so small where it's like, look, if your stablecoin has less volume than Mudang, like it can't really be a serious proposal.
Yeah.
And if they're to win this, I think, Hyperliquid should get their tokens or whatever upside they're here to offer, but there's a lot to consider.
Yeah. So Vance, maybe just taking a quick step back as the current work that you guys have done in the Hyperliquid ecosystem, or just broadly your investment and interest. Obviously, this is like one of those no VC. This is like the epitome of the anti-VC movement that we've seen, right? And I'm not going to single you out here, but that's kind of the whole community vibe of Hype. Obviously, you're then forced to buy on open market, participate either in the EVM, in investing into the early stage companies, or just being a large Hype holder. Generally, what is Framework's involvement right now in the Hyperliquid ecosystem? How do you think about the project? And then, I'm sure we'll get into some of the nitty gritty here.
I think it's also important just to say what is the relationship with Sky, because that is another angle in which you guys are approaching this.
Yeah, maybe do Hyperliquid first. So we have a lot of Hyperliquid as Framework. Not going to really get into specific dollar values, but I think at one point, we checked and we're top 20. So we have a lot. We've also incubated one of the top market makers on Hyperliquid. So, our interests are represented in multiple different ways across Hyperliquid through owning the token, through being one of the people who've incubated one of the largest traders on Hyperliquid. And so I would think that is kind of our involvement. And I would also say our cost basis for the Hyperliquid is not $50, like a lot of people who've just been buying over the past couple of weeks. We've been on this for a while. We also got prominent team members like Rajiv, who are contributors to the open source Hyperliquid ecosystem, and we're proud of that. So I think that is kind of our current involvement. And I think going forward with things like HIP3, we do have enough hype to create our own markets. And we have the ability to not just be a venture capitalist, but also use our arms and legs of our relationships network, the market maker that we incubated, to actually really drive home a lot of change and a lot of progress for the ecosystem. So I think that's the first thing. And I think a lot of the proposals that have come, more recently in terms of expressions of goodwill or intent, we did the spaces today, but I don't think having letters of reference written on Twitter for the first time in terms of here's who we are and all that stuff, it kind of seems too late for that in some degree. So that's all I'll say about that. And then in terms of Sky, I think Rune and us are kind of the largest holders of Sky. We're extremely active in the ecosystem, and people forget, but Sky does almost 300 million of profits per year. It has about an $8 billion balance sheet. We are the largest LP in a lot or most lending protocols within DeFi. And so we have a significant amount of weight that we can throw around. And all of that can be brought to bear for Hyperliquid. And like if the USDH ticker, whatever happens there, I don't think it's make or break for Sky in terms of us being interested in this ecosystem. We're going to come regardless. But that $8 billion is something that we can wield that not many people can.
Yeah. Yeah. And just one last kind of broad one, because I think we can make this really fun, is what is your take on the growth of USDH and the Hyperliquid's general move into stablecoins? I've seen tweets floating around recently saying that there's only a couple good business models in crypto. There's trading, there's stablecoins, there's exchanges, kind of like all three in one here. What's your take on why these stablecoin teams are really trying to win this, and just generally this direction for Hyperliquid? Like, what's the growth opportunity here? What's the 10x?
Yeah, so maybe just to dig into why derivatives are such good kind of sinks for stablecoins. Like, there's very few places that people naturally hold stablecoins. A centralized exchange is one of them, but a derivatives platform where you can margin with that coin is generally the best. And there's no surprise that the largest centralized exchanges have the largest pools of stablecoins. This is the first time where we've ever seen that kind of be flipped on its head, where a derivatives exchange that works on chain is a natural sink for stablecoins, but it's also a place where you can use those stablecoins to be composable, generate yield, and do different things that are creative to the business model. And if done right, you're adding another $200, $300 million of buybacks or yields or whatever you want to call it to the assistance fund. And so it's not just an afterthought. This is kind of one of the two really proven out business models within crypto. And so, that's kind of, I think, the current opportunity. And, if it's $5 billion today and it can double its open interest, I would think that the stablecoin growth would roughly track that. So you're probably looking at anywhere from 10 to 20 billion, which at those levels is 500 million to $1 billion of buybacks. And so, like, if you're thinking about Hyperliquid as like a $500 coin, you kind of do need that other engine to be firing. And, if you really think about it, I totally get the Genius compliance stuff, and like, that's great. And there's 3 years for everyone to comply. And there's a variety of different jurisdictions throughout the world. As interest rates go to zero, which, sure as you are sitting there, they will go down. That opportunity also disintegrates if you are, an only Genius compliant stablecoin. And I think Hyperliquid should want much more than that for the stablecoin that they're working with. So that's kind of the opportunity. And yeah, I think over the long term, the stablecoin opportunity on Hyperliquid will be multifaceted. It will be multi-ticker. There will be a HIP-3 component. There will be a variety of spot quota assets that people can use, and they'll all have their own value props. So, like, I get why this is so interesting, and it is awesome to see the community representation here. But getting the ticker is like the first inning of the first. It's so early. It's great to see, but there's going to be more to come from this.
At the very least, it's been an incredible marketing campaign. The best since John Wynn put a trade on Hyperliquid.
Yeah.
One thing that I think is important is call out the unique value propositions of each of these proposals. This is what we've been trying to do. The last stream, we had Nick from 𝘗𝘳𝘵, we had Sam from Frax, and we also had Bo from Paxos. And so one thing that stuck out, and it seems like, the 100% or 95% plus of buybacks and revenue to the Hyperliquid ecosystem is essentially table stakes at this point. I noticed in Sky's proposal, there was 4.85%, where most other companies are offering 4%, which is just basic T-bills, some advanced risk management that can get some additional yield and potentially more. But what really stuck out that looked unique was that Sky can provide 25 million in capital to create an independent Hyperliquid star. I'm not entirely sure what a star is. Maybe you could help unpack what that is on Sky and how that could benefit the Hyperliquid ecosystem beyond what some of these other proposals are offering.
Yeah. So, look, the math on Sky's proposal is about 112% rev share. And like, the whole idea of like, I'll give you 95%, you are earning money from the stable coins that you're being given. I don't think that really should be kind of the goal here, nor should the goal be strictly SOFR. Like, if you want SOFR, there's a bunch of protocols that can go put these coins in T-bills for you and hold them in State Street. That's basically kind of what I see from the other proposals. And so like what Sky is proposing specifically is something that as SOFR goes down will not just track it, but beat it. And the reason that it's able to do that is a variety of things. Number one, it has a way of allocating capital through stars, and we'll get to what the Hyperliquid star means, where Sky is generating yield from T-bills. It's generating yield from the Ethena basis trade. It's generating yield from Syrup USDC. It's generating yield from AAA, Janus Henderson, CLO ETFs. The diversification of risk collateral and the ability to beat SOFR should be table stakes, not just 100% SOFR. And then I think kind of the next point on the star is kind of like, you know, if we weren't going to vote for Sky, we'd probably vote for native markets for this reason, which is the stars of Sky. And, you know, I know for people who are just learning this terminology, it could be a little corny, but bear with me. There's a star called Spark. And if you want to check it out, it's data.spark.fi. Spark manages about $3.6 billion of the $8 billion balance sheet of Sky. And they make about $110 million a year of run rate profits. And that is directly cycled back into the ecosystem, which generates more yields and more risk capital. And so really, like if Hyperliquid is looking for a DeFi partner that can inject serious amounts of capital, risk capital, and earn yield on that, that is what the Hyperliquid star would be. And so that Hyperliquid star would also have its own token, which would be farmed out to Hyperliquid users, which would give it some of that nativity and community upside that the native markets proposal has. And yeah, I mean, you know, the hope is that we can cover all bases here. And if we don't win USDH again, we're still coming. But this is what Sky has to offer in terms of not just, you know, SOFR plus, but also real tokens that are in the community that are going to have tremendous upside.
Got it. You mentioned earlier that you guys are about somewhere in the top 20 in terms of holders. Are you guys also staking and running validators and therefore going to be voting on this proposal? And if so, how does your voting, like earlier before you came on, we were talking about CL207, who said publicly he controlled about 15% of the voting power. And he
Hyperscan does. Yeah.
Hyperscan, exactly. And he would like, you know, Van Eck's proposal given to him as a cat. But you guys you know,
a direct quote tweet of Jan Van Eck, the CEO of Van Eck, absolute ratio too.
We're not going to explain things to you as a cat, but I'm curious, like how much voting power do you guys control if that's publicly available? And yeah, I mean, where do you see the other validators? I'm sure you have a general understanding of the landscape. How do you see these things shaking out?
So I don't think we've disclosed how much hype we own. It's significant. And the validator list, I've seen it. I can't, you know, mentally calculate what's been, you know, delegated to them, but it seems like a lot of hype, and we would be a minority of that, you know, in the scenario where we are delegating to that, you know, validator set. So I don't think, you know, we have enough hype to sway the proposal on our own, and that is not really our goal anyways. And sorry, the question was, you know, how are we going to vote?
Well, I think you've made it clear how you're going to vote. I was curious how you guys were positioned if you were running validators yourself, and if you had a hype position that was significant enough to make us, you know, a material impact on the vote.
We have enough hype to create a HIP-3 market, you know, minimum, which is, you know, some sort of guidance for you guys. And in terms of, you know, us whipping the vote, our process is, look, like we just want to explain our proposal. And I think we have put the best economic terms on the table. They're different than everyone else's, but I think no matter what you think of it, it's an interesting proposal. And so the hope is that, you know, it's not just kind of like we offer $25 million and so someone offers 26, or like, you know, that type of thing. I think the best thing for the Hyperliquid community would be to consider the proposals on different dimensions and decide what they want. Do they want the most interesting, you know, max value in terms of like they think Hyperliquid's going to go to $500, but they need that stablecoin engine to get them there? It's probably Sky. Do they think that max fees and native markets are really, really bullish and interesting and can kind of provide that next huge community airdrop? Probably go with them. But, you know, disparaging people, trying to FUD people, that's kind of not our strategy here. And again, whatever happens, like we're coming.
Yeah. So I'd like to ask you about some of the stuff that's in the Ethena proposal, just to get your perspective from the Hyperliquid community perspective, less so the I want to kind of see 𝘗𝘗𝘕 perspective, which is, how valuable do you think Ethena committing anywhere between $75 to $150 million in incentives for HIP3 front ends, as well as launching this USDH being backed by USDTB, being like, how important are those two specific things to the Hyperliquid community? Should we value that more than other parts of their proposal?
Yeah, not to beat a dead horse here, but I don't. I think the Ethena proposal is top, 4 or 5. I would say the best ones are kind of Sky, Ethena, Native Markets. I think Paxos, has managed a large one. Like those are kind of like the ones that are kind of table stakes. 𝘱𝘭𝘆𝑑𝘧𝘰 as well, just because of the Van Eck backing. Again, I don't fully. I think so. Like maybe one way to think about USDH is. It should be a wrapper that has compatibility with multiple jurisdictions in the same way that, Hyperliquid validators are based in a jurisdictionally distributed way. You should probably think about that for the same, context of the stablecoins that are underlying the exchange. And there's a couple of reasons for that. I mean, one of the ways that Hyperliquid does not go to $500, it goes to 0, is there's some sort of bridge hack. There's some sort of jurisdictional seizure. There's some sort of accounting issue of the stablecoins on that bridge. And I think one of the most likely vectors that, I've personally experienced is when USDC depegged because Silicon Valley Bank went down. And so it's not just a theoretical experiment. And I think this is maybe one area where there's no Hyperliquid mission statement, but I think there is some sort of component of, do you want this to be a maximally decentralized exchange in terms of not like the speeds and feeds of it in the functionality, but like of the jurisdictional basis? Or do you want to bet it all on the US right now? Given that Tether, the largest stablecoin in the world, has not even launched in the US yet, I don't know why today would be the time to make that decision.
Very, very good point. Yeah, interesting. Well, that's been kind of the entire community vibe around Hyperliquid has been this kind of, you could say it's about no KYC, but really it's just about this. They've kind of not played by the same rules as everyone else, you could say, or they've kind of engaged in a very, very, new way of launching a perp stacks in terms of their validator architecture, as well as just the way that they've operated within kind of the broader KYC and perps rules. But then at the same time, we've seen the US kind of become far more lenient in the past few weeks. So
it has, but I will say, when you're running a stablecoin, if you're short by even $10, that's a huge problem. You kind of need to wind up the whole thing and turn it back over and figure out who's owed what and wind it down. And jurisdiction seizing stablecoins is something that has happened before. Both at the bank level and at the stablecoin level. And so again, think about the stablecoins that Sky produces. One is DAI. It's the largest decentralized stablecoin in the world. It's only backed by ETH. I think there's 3 billion in existence. But that's for a segment of people who just say, I want the fully decentralized, Ayn Rand version of the stablecoin. And then there's another one, which is USDS, which is, a generated asset by Sky that is primarily used for lending. It does have a blacklist function, so it can be more compatible. And so the idea of the Hyperliquid stablecoin should be probably designed to be somewhere in between those two, and not all the way of let's just give State Street all our money. I don't think that's really where we are today. A strategic move to give all of our, communal money to just the US, I'm not sure that is the right path, but it's certainly one that can be explored with something like Sky, where, you're creating an asset that has, varying functions, not just being Genius compliant.
Yeah. So we ran the math on this, and I think it's somewhere around $200 million of profit a year or so up for grabs should the $5.5 billion of USDC that is on Hyperliquid today earn the current, short-term interest rate around 4.5%. When you're looking at the actual path to Hyperliquid to something like $500, and kind of trying to articulate a thesis around how this thing could grow really at 10x in price from here and 10x in market cap, price predictions and whatnot aside, generally, you've mentioned a couple of times about how you feel this stablecoin piece is important, or at least the community could see it that way. How do you reasonably see the market accepting Hyperliquid in the $100, $200, $300, $400 range? If next year, the following year, 5 years, whatever the timeline or prediction is, we can kind of leave that out. But I'm just curious what you think the necessary steps for the market to accept, this token as one of the top 5 or top 3. Is that possible? How do you see this actually tangibly playing out?
Yep, and this is usually where I say not financial advice.
Okay.
I mean, look, right now, my personal calculations are, it trades at $2 to $3 billion of earnings per year. And I see people using the circulating supply versus the fully diluted supply. I personally use the fully diluted supply. I don't even think you need to use the circulating supply because it's growing so fast. But, I think it can probably get to 100 just based on the perp volume that exists today, and probably higher. But if you want that rate change in terms of why are people just now buying Hyperliquid at $50, you probably do need another economic engine to turn on. That can be something like unit listing stocks, bonds, commodities, and allowing large leverage on it. That's certainly a path where we can get there. Another is HIP3 markets really kind of take off in a different direction. Maybe options launch, maybe that's interesting. I think those are probably, other than unit, lower probability paths. I think the higher probability path is the stablecoins continue to grow in the bridge. You get to $10 billion of stablecoins that are earning 5% per year, and that's all profit. That's $500 million of profit that you can then add onto your existing earnings. And so there is a path here, I think, for it to trade substantially higher than $100, $200, $300, but it does need to have some sort of other economic engine. And, just having laid out all the paths, those are the ones that I can imagine. And again, if interest rates go down and you're a Genius compliant stablecoin only, who does that serve? And it's not, what I'm trying to say is not, if USDH goes to the wrong people, it's just this forever zero of earnings in the wrong way. The stablecoin war will be multifaceted, but you should kind of be rooting for someone who has a different approach, at least to take on some share of the stablecoins that are in that bridge and do something different with them. And part of it should probably be a very native team like Native Markets. And part of it should probably be a Genius compliant one. And part of it should probably be something like Sky.
Yeah.
And I think that is where we will get to. But the USDH beauty pageant is everyone gets to present. Everyone gets to show what they're doing. And I think that's a hugely constructive process.
I'm curious where you may see stablecoins going in the 3 to 4 year range. And I haven't really seen you tweet about this, but I have a feeling you might have a take where there was a video yesterday that came out of this Russian finance minister, I think, talking about how the US is going to basically, they have this $35 trillion pile of debt and they're going to try to use crypto to devalue it. And I'm curious if you think there's any validity to this claim, and if so, how do you see the administration progressing the stablecoin agenda? Besson has said that there's going to be 3 trillion of stablecoins, by 2028, with rates going down. How do you think this landscape shakes out as we're just continuing? It feels like on CT, everyone is calling, there's going to be one more rally and then everything's going to die. But we're just continuing to hear this administration be champions of not just crypto, in particular stablecoins, for the long haul. And so I'm just curious what your macro view is over the next 1, 2, 3 years.
Yeah, so I think the Russian minister's comments were taken literally, and probably a literal basis to understand that is not the right one. But I do think he has a point on a larger scope where it is, Besson has laid out this framework of we're going to have 3% inflation. I think we'll get there. We'll have 3% in growth. I think probably we'll get there. And then we'll have 3% in deficits. And that is not where we're tracking today. I think it's more like 3.37 or 3.38.
Right.
And that's assuming no recession. And so I think what the Russian foreign minister is trying to say is that there is a debasement trade going on, and there is going to be a new home for this money. And it's probably not going to be bonds. And whether you read, Michael Hartnett, who's the Bank of America CIO, or you read Zoltan Pozsar, it's pretty clear the governments are just going to be printing more money. The debasement trade is just starting. And that's kind of running into this idea of like cycle thinking. And the reason that I don't like cycle thinking is not because I don't believe in cycles. I think the reason I don't, the reason I don't like cycle thinking is because it kind of makes you like this imprecise person. It's like, you know, like people throw around words like, okay, like fascism. It's like, what does that even mean? Like, what does cycle thinking even mean? Like, what point of the cycle, what inning? It just like doesn't mean anything. What does mean something is that this debasement trade is starting, and it's not going to stop for a very, very long time. And what I've been tweeting recently is like the cycles that I can see them as of now are gold rallies, then stocks rally, then coins rally. And it kind of goes in a circle in terms of they search for their valuation ceilings, they search for kind of the risk-adjusted return that they can get, and then they pass the baton. And unless there's a war or 500 basis points of interest rate hikes that are coming, you know, I don't think that's really going to play out. And so I don't think the Russian minister is lying. I think it's kind of a little bit of, you know, imprecise term to think about it with, but, you know, he's definitely right on some degree. The debasement trade is just starting, and the cycle thinking is probably not as relevant in that context.
You know what's funny though, guys, is I've found that each time that the crypto market heats up since 2017, the fiat is dead or fiat is hopeless idea resurfaces, especially within the small community. But each time that it happens, it's more and more real. Like it becomes more and more compelling of a situation. Like this time around compared to like in 21, it was what, inflation and, you know, oh man, like we had this inflation rise where, oh God, now it's like, oh man, like stuff's breaking, you know, things aren't things. So there's always a more kind of compelling reason as to why the debasement trade is going to happen. And while I do agree with you, Vance, I think there are probably people out there, you know, including Robbie and myself, who have done pretty well this cycle and will do well by taking some chips off the table. But we'll also, you know, ride for the long term.
Yeah, I mean, maybe a different way to think about cycles and you know, if you're building a capital base or if you're deploying a capital base is number one, you measure your net worth from cycle low to cycle low, not top to top. So that's the first thing. And the second is just for each cycle, you need to build a more stable capital base for the next cycle. And so, you know, things like cash or things like real estate, where you can lever that up over 30 years, you know, that serves as a very stable capital base, kind of a base of operations for you to go off and take risk. And so I think in that framing, you know, in running it up and running it back, cycles are real. But at the same time, you know, there is this whole idea of the power of staying put. Like if this podcast, you know, framework, myself, like I've been in crypto for 13, 14 years at this point. It's wild. Most of my adult life, like, yeah, pretty early on, I realized that there were not that many people who are, you know, really bought in over the long term to this industry and community, who are really intelligent and sharp and willing to work hard. And if you have all of those things, like there is no other place that is better for you to create wealth than crypto. Like, people, you know, they joke about, you know, this is my last cycle. And my answer is like, where are you going to go?
Right.
Want to go get a tech
like what's the trade after the trade? Yeah, something we talk about a lot here too.
Like, and sitting on the beach is pretty boring. Like the purpose, the struggle, all of that stuff is what makes life interesting. Like, and crypto is generally the best place to express that, in my view.
I'm curious how that translates into venture investing. You know, we've talked a lot about like a liquid bag, you know, being hype. They'd have no VCs, right? So it's all liquid. But, you know, when it comes to venture investing, how do you think decade timescales? Like, do you ever think like, what is the likelihood that this thing really takes off? Do you have to have that mindset with every single deal that you do? Or is there a play where, you know, maybe you get in contact with a founder, they have a great idea, but, you know, it's going to work on a 2 to 3 year time horizon. That's where your vesting is up. But on a 10-year time horizon, maybe it doesn't make so much sense. How do you play with the time horizons, given you know the long-term thinking and mindset that you just mentioned, but also with kind of the moment in space and the you know evolving metas at play here, where something might make sense for a time and place, but not so much on the multi, you know, cycle, if you will, time horizons.
Yeah, I mean, I think we have a long-term closed-ended fund, which I guess puts us in the category of VCs, but we play whatever game is on the field. And I think the worst thing that you can do across all investing is try to force it. And you can tell when you're forcing it. And I think, you know, if you ever get that feeling, you probably just want to back off.
Right.
You know, our bread and butter is working with founders, whether that be in the liquid markets or the private markets. It really makes no difference to me. When, you know, FTX and Luna collapsed, we were primarily a liquid fund because we thought those prices were advantageous. We were trying to do things like we tried to buy Celsius, you know, because we thought that could have been an interesting investment. And so there's a lot of things that just come your way in crypto that you need to be kind of moving your feet for. I don't know what the best sports analogy is, but, you know, like just be ready, like ready yourself for it. Over time, we've gotten better at founder selection. Like I started the firm with Michael. I think I was 26, he was 27. Like nobody gives you a handbook for this stuff. And so, you know, there's been capital that's been incinerated along the way. There's been bad decisions. There's been bad founders. There's been people who haven't even tried to start a startup that have just walked away with our money. All of the bad things that you can imagine have played out. And I think where we are today is the sum of all of those learnings. And so we get better over time. And forecasting the long term is, I mean, like basically impossible. I think the best thing that you can do is get a pretty prescriptive vision of where you are today. And because crypto moves so fast, today can extrapolate really quickly. Hype opened at 4 and went to, I think, like 20 in the first 48 hours. And if you weren't buying on that first day, you know, you kind of had to wait for the Trump tariff tantrum to buy. And, you know, that's the other thing I think about venture investing in a liquid context is, you know, when the Trump tariff tantrum happened, that was when we bought a lot of our hype. And I think about it in terms of, yeah, it was great, but like, it's also like
we were shitting ourselves, Vance. We got in at $2 first minute on launch, just jamming it and just watched it all go down. And I was just,
you know, those feelings are good because like you do need to touch the stove to realize that it is hot in a lot of investing contexts. At the same time, like you have to have this idea of the hardest day to invest for is today. Like there's also this thing where it's like, okay, after the Hyperliquid unlocks happen, like then I will buy. It's like, well, you're talking about investing at a date in the future. Think about today, not really the future. It's kind of my idea. And if you ever see someone building like real technology, like you have to nurture those people. And I think that, you know, Sky is a pretty good example of this, where they're building real technology. Maybe they're overlooked by the market, but like just like a dog on a bone, not gonna let this go. We're going to build it. And like through all the building and all the time compounding, that will be what makes the difference. But trying to do big ideas about the future, very rarely can that happen. I think, you know, maybe a couple of people like Peter Thiel are capable of it, but certainly not me.
What kind of advice would you give to your 26-year-old self and Michael back when you were starting the fund, given all the lessons that
two future fund owners here? We've been, you know, scratching our chins, wondering how to do this media VC thing. We've done one fund already with just our own capital, but the whole raising process, you're looking at two young bucks here.
Andy and I toss around a lot of ideas, right? So, and we're right around the age when you started Framework.
Look, I mean, go for it. First of all, I think second of all is, you know, our first fund was basically our own money. We tried to pitch people, it didn't work. And the first fund, I think, was 15 with one outside LP. And I was living in Michael's parents' basement at the time. It's pretty much as dire as one could possibly imagine was the setup for that first one. And man, I mean, we launched in the first DeFi bear market and kind of like just blitzed it immediately. So we did get, you know, fortune, whatever, luck, skill, preparation, some combination. You got to look for things that move the needle. You know, like if you do have a Hyperliquid do 1,000 thesis, never let that go. Well, reason it, you know, but like just be there. But, you know, you do need some sort of divergent perspective from the crowd, especially as you kind of get on to your second, third, fourth fund.
Appreciate the sage wisdom, Vance, and the time today. Looking forward to seeing the next, I guess, 24 hours or so of this Hyperliquid battle into tomorrow, which will be the decision date, I believe. And I mean, as you said, look, I think there's going to be obviously one winner for the ticker, but at the end of the day, the market's clearly signaling where it wants to go, which is more stablecoins on Hyperliquid. Really, it's competitive to Circle. Circle is going to have to really, you know, make a stance to get USDC native on Hyperliquid, as they've previously done for Ripple, Cardano, 𝘸𝘵𝘀, and others. And so looking forward to kind of just watching this unfold, and also looking forward to Plasma's launch. We invested in that one, talked to Michael about that quite a bit a couple weeks ago. That one's getting close. So a lot of interesting times in the stablecoin space. And I hope this podcast changed your podcast current crypto meta view tweet that you put out about only talking about treasury companies or other stupid shit. So thanks, man.
Look, the bar to be bullish is extraordinarily low, and you guys are succeeding. So thank you.
All righty, Vance. Speak soon, buddy.
Take that as a compliment. Thanks, Vance.
Yeah, cheers, man. All righty, Rob. Well, who better to follow Vance than our boy Rune, who we've had on the show before? Hold on, I just want to take one quick second. Did we just have one of the largest investors in the space give his bull thesis on Hyperliquid, not financial advice, to multiple hundreds of dollars with just a couple?
He said $500,
and then
he closed out saying, "If you have Hyperliquid to $1,000 thesis, hold on to that."
I mean, that's
not financial advice.
X to trillions because his bag is worth 80 million. You know,
I think it would be interesting to figure out, and people have done this calculation, I'm sure. You know, just based on the current earnings, I think the price to earnings, if you're putting a pretty traditional and typical analysis on this, it's already under the multiple that a lot of like growth companies on the S&P and that are public are trading at. I don't have the numbers offhand, but adding another $500 million to their annual earnings would certainly cause that figure to jump.
Well, we're at 53 right now. Market's bullish. We've got Rune in the backdrop. I know it's late for him. I don't know how he's feeling about the current race of Hyperliquid's USDH. We're going to get him up, and we're going to talk all things Sky's proposal. Stoked on having Rune up again. It's been some time. Rune, good to have you.
Glad to be here. Good to see you.
Good evening to you. It's been a busy couple days, I assume, to get this proposal ready.
Yeah, I mean, to be honest, I was just sitting and thinking about it, and I think it's really been a lot of fun. Like, this is some of the most fun I've had in crypto for a long time. I mean, there's this, I don't know, it's kind of like the Olympics or something. Everyone's like talking about it, and there's all this like buzz and excitement. And from our perspective with Sky, I mean, our approach to this was that we realized that this is like not just, it's not just like a race for a Hyperliquid stablecoin ticker. It's like a really interesting moment where there's going to be a lot of attention. There's going to be a lot of people who want to learn about stuff. And because Sky had all of these initiatives and products in the works anyway, meant to sort of be our entry onto Hyperliquid, it was like the perfect time to sort of go all out and really be like, here's what we got. We're doing a lot of cool stuff. And we're trying to really explain to people just how much value it can create.
Yeah, Sky or Rune, sorry. So, I mean, we had Sam from Frax, we had Bo from Paxos yesterday, and we had Nick from Agora. And so we kind of had a somewhat of a similar conversation with each. And I think it'd be helpful for the Hyperliquid community to have a similar kind of vibe. And so I just want that, that was, we appreciate this kind of opening statement, opening remarks per se, but maybe you can just give us your overview of Sky and Hyperliquid. How do you see Sky coming into the Hyperliquid ecosystem? What is the storyline here? Kind of your opening remarks to the Hyperliquid community. What kind of impact do you want to make? And then, yeah, we have some specific questions about the proposal and some of the other kind of ideas you have about the vision and more. So,
absolutely. Yeah, absolutely. I mean, I think, so Sky is a very OG DeFi protocol, the fourth biggest stablecoin project in the world. I believe that it is the second most profitable DeFi protocol, second only to Hyperliquid. And it's honestly like, it really, that aspect of Sky and Hyperliquid, I think, is very similar and very interesting. Sky is also like famously, it's the first project ever to do buybacks. We were, way back in the day, people were like, that doesn't work. We were weird because we wanted to do buybacks, but we were like the people were really into buybacks. And so the fact that Hyperliquid was sort of another community that has this like obsession with buybacks, I find that to be quite amusing, to be honest. And it's one of the things that drove me to look into Hyperliquid and realized that what's so interesting is, it's one of these very high energy crypto communities, but it's based on such a, honestly simple, but very solid business model, right? And that's the kind of stuff that we are just really, really into in Sky, because that's really been sort of the backbone of Sky all the way back to its inception as maker, all the way back in the day, right? Of figuring out how can we take blockchain technology and how can we use it to just deliver some real value in a way that really makes sense. And so obviously Sky is like a major, super advanced stablecoin protocol that would be very well suited to power the USDH stablecoin. From a sort of technology and sort of long-term growth perspective, it's just completely unrivaled. The type of technology, the type of infrastructure, and the approach that Sky is taking to stablecoins is just completely unique and just much more powerful than what anybody else is doing. But the reason why that's the case is actually because of all the other things Sky is also doing, right? And particularly this involves what's known as the Sky Stars, which are basically these sort of independent, autonomous economic units inside the Sky ecosystem. And they're kind of like projects building on top of Hyperliquid, but I guess the difference is they're a lot more connected to Sky. They're sort of like an extension of Sky, yet they have autonomy and they have the ability to innovate and to move fast. And what they enable Sky to do is to really effectively and very with a lot of bandwidth effect, basically effectively, and with a lot of bandwidth, a lot of size, a lot of things happening in parallel, allocate the assets of the Sky protocol, develop new products, front ends, adoption funnels, all of these things. And then also crucially partner with other ecosystems. And that's actually one of the things that drove Sky to sort of transform into what it is now, into a modular ecosystem, was that we realized that if we're going to partner with all the different blockchains and the L2s and all the new L1s and all the new like the different areas, industries you have to specialize in, having these stars, these like subunits that can act independently and then be the sort of the bridge to these other ecosystems is going to be so essential. So actually that is like our initial the moment when Sky started basically being like, okay, we are sort of beginning the work of sort of scoping out how will we launch on Hyperliquid and how we work on Hyperliquid. Then step one is, all right, we're going to do a star, because that's kind of like the forward operating base, right? That's the thing that's going to be this sort of the nexus of all the ways that Sky will deploy assets into Hyperliquid, grow stablecoin adoption, support new innovation, support new projects, and basically anything where Sky and Hyperliquid can synergize, which is really a lot of places, because Sky is just, there's nothing we love more than working with partners that can generate real value and then giving us some kind of business opportunity from that.
Yeah, Rune, I think that, first of all, that was a very comprehensive answer, and we appreciate that. And I think that you guys have done more for DeFi in the last couple of years than 99% of teams. And we just had Vance on recently, just in the last half hour or so, and we were talking about some of the specs of your proposal. And I think one thing that we asked a lot of these teams, and that I think is going to be particularly interesting for you, is like, what does the actual ticker mean to you? Like, why is this USDH ticker important? In reality, it's just the current ticker. You'll be able to buy tickers in the future that have the same feature sets, for perp margin positions, for settlement of trades, etc. There'll be a future ability. Why does this specific ticker matter to Sky?
Yeah, it's a funny question, right? Because the ticker itself doesn't really matter to Sky. It's that it matters to everybody else that makes it matter to us. I think ultimately, if
That's funny.
If the Hyperliquid community, they really understood the way that Sky's technology how it can synergize with what Hyperliquid got, then both ecosystems would just start growing at a completely exponential pace. And so that's where I think, there is this strong belief in the Hyperliquid community that USDH is like sort of, this is the moment to like have Hyperliquid actually be the place where a really powerful stablecoin comes out and actually really starts dominating the whole industry, right? And this becomes another thing that is sort of just like a successful Hyperliquid product. And I mean, when I'm hearing that type of vision, this sort of the desire to like not just do another stablecoin, but like this is the thing, this is going to be the one thing that's going to be super awesome, then naturally to me that means, well, then it has to use Sky's technology, because I mean, this is what we tried to build. We spent the last 10 years basically researching, figuring out all the foundational stuff, then developing it, sort of iteratively improving it over and over again, and adding the layer of modularity and autonomous agents, which is just, it's a lot more advanced than how anybody can, even sort of conceptualize currencies, right? But it's a vastly superior model for managing a currency, especially if you want to be able. I mean, if your starting point is you're decentralized, you're not like rooted in some institution or some country or a team or a person or something like that. You're like a decentralized system that, more than anything else, it wishes to be immortal, right? It wishes to be untethered and just able to operate and deliver the best it can possibly do without having to sort of swear fealty to some particular counterparty or authority. That doesn't mean you can't like work with counterparties, authorities, regulators, institutions. Quite the contrary. That's like actually super, super important, right? Otherwise, you're going to get nowhere. But it's just the approach that Sky is taking to this of like basically ensuring diversification, checks and balances, maximizing governance above everything else. I think it's just like the kind of the raw power that Hyperliquid has, like the raw energy that exists in this community, is like an unusually good fit to basically try to merge with the technology and the capabilities that Sky has developed. And yeah, I mean, it's gonna happen no matter what, because like I said, we're already in the process of basically eventually doing a Hyperliquid star. But if you then had this kind of groundswell of support, which I mean to some extent has happened, there's actually been a huge amount of support. I'm quite floored by just like how much excitement and positive reaction there's been to our proposal, right? But if you had Sky actually being sort of chosen, symbolically to be, okay, this is how we want to build our USDH stablecoin, that would of course just take this energy and like 100x it, to be honest. I mean, it would actually be pretty spectacular to see how that would play out.
Yeah, Rune, I mean, I think we had a really interesting kind of thought experiment with Vance that I think you're hitting on here with Sky, which is basically the stablecoin for Hyperliquid. Now, there's a lot of alignment that you talked about, which I think that we'd like to get into as well. But I'm curious specifically on this perspective for Sky, kind of when you're looking at the landscape for the type of stable coins on Hyperliquid and how relevant or important being genius compliant is. And this kind of idea that we should, Vance kind of framed it as, do we really want to give up everything and just put all of our eggs into the US basket and be like, we're genius compliant, regulated stablecoin? Or do we maybe want to be somewhere in between, like essentially Sky's DAI, which we all know in the crypto space as being very, very decentralized, truly kind of like the original of this algorithmic type stablecoin, obviously has become more and more intertwined with Circle and Tether, or something like USDS, which is kind of in some capacity on a different end of the spectrum, much more yield oriented in this regard, and kind of has a different level of kind of architecture. Let's just put it that way. when you're thinking about USDH, Vance kind of framed it as maybe is somewhere in the middle of these two types of stablecoins is the ideal. How do you think about this? Is there a certain type or architecture of the USDH stablecoin, or just a stablecoin in general for Hyperliquid's future, given its current path, that you feel is most right or suited? And obviously, we're under the impression there's going to be multiple stablecoins, but what is the architecture design that you feel is particularly correct for Hyperliquid's community today?
I mean, the simple answer is I think that the correct approach to money and currency is the approach that this guy is taking with USDS specifically. If you had to sort of pick one method, I think that's the obvious one, and it is focusing on risk-adjusted return, right? I mean, crypto is still really complicated, and like the world is like a complicated place, and finance is complicated, and it's also boring, and it's also like scary with big bad governments, making rules, but then also, I don't know, tariffing everything and stuff. That also means that sort of, if you think about the thing that led to the creation of crypto, that was a financial crisis, right? Which was this idea that, it's cool, but like the traditional system also doesn't really know what the hell it's doing, right? But what's interesting is now, first with blockchain, we now have systems that are like, they know what they're doing in some sense, right? In the sense that like you have a blockchain, is like there's certain things about the blockchain that is just absolutely clear. Like this is what it does. This is how it works, right? What's coming next now is the AI revolution, right? Of like how now you're sort of like, not only is it like all the humans can sit and look at the blockchain and agree on what's going on, it's like now you don't even really need humans anymore to like figure out. You can sort of take the emotions out of the picture and just be like, okay, what is like the correct thing to do logically, right? Let's just think logically about it, right? And that's where what you're going to end up with whenever you think about money from that perspective is risk-adjusted return. Like that's the only thing that matters, right? You want something that is, maximally stable, and then it should just be delivering the best possible yield while minimizing this risk. And that sounds super simple, but most people, if you try to sort of pitch them that vision, or you ask them to pick something, they're still going to like fall into the pattern of like, I don't know, choosing an authority or something. Like they're going to choose some kind of easier way to make their decisions, right? And so ultimately what Sky aims to do is to deliver the option for people to basically, people and systems to basically come up with the solutions that are just in, that the market and the users basically wants. And that both means something like, are you catering to like human end users that need some kind of regulatory stamp of approval? In fact, maybe they don't care about any kind of return because they're just doing payments, right? I mean, that's an interesting thing we see with Tether, that like nobody cares about yield on the Tether. They just want to not get like hyperinflated by the Argentine peso or something, right? And there could also be like, different mathematical approaches to, okay, we want the best possible risk-adjusted return, but like we disagree on like the math and the data around it. Sky basically like offers the tools for all of this. Like I would say, personally, I would say USDH should like follow the USDS model, go for best possible risk-adjusted return. But it would completely be possible to use Sky technology to also make the absolute best possible, fully compliant, very restricted collateral stablecoin you could possibly imagine, right? Because you have a stablecoin that you could take all the beautiful, super advanced decentralized technology of Sky, and then you could like sort of put a bank in there somehow. Like, basically take a bank and be like, yeah, we give you control, but everything else works as it is. It's just the parts necessary to like fully comply is controlled by some kind of centralized regulated entity. And it's still going to be better than just having a bank doing it and writing some reports or doing some, like having some database, right? You always want as much as possible on the blockchain.
Yeah, I think we can certainly agree there. And so another piece to this genius compliant part is the risk-adjusted return that you're talking about. And so I'm curious to understand mechanically, you guys are able to offer a higher risk-adjusted return. I think it's about 4.85% after there's actually a cut to Sky someone could argue it makes it more incentive aligned because you guys are actually making money and have skin in the game. But it's still, even after that fee, a higher yield than what some of the other proposals are suggesting with 100% revenue share. Just by, vanilla T-bills, they're looking at generating maybe 4 to 4.25, and you guys are offering 4.85. So I'm curious, where does that extra delta come from? How are you guys able to offer this higher yield to the Hyperliquid community, even after taking out a small fee for yourself and offering the rest back to the Hyperliquid community?
Yeah, I mean, the answer is diversification of the collateral and then credit enhancement, right? So basically, Sky is deploying the $13 billion USDS collateral portfolio into all sorts of assets, right? But if you like sort of very broadly generalize, it's about half crypto exposure and it's about half TradFi exposure, basically. And these are all totally different types of assets, right? There's like regular sort of lending type of activity, like 𝘱𝘭𝘐𝘵 and the Spark, which is has one of Spark, which is a Sky Star. One of its products is basically an 𝘱𝘭𝘵 clone that is a little bit lower risk, a little more simple than 𝘱𝘭𝘵 itself, and has its own institutional user base. There's also like exposure to Ethena. There's exposure to like T-bills, but also more advanced TradFi assets like CLOs. And so each of these assets, they all have a different risk. But then what Sky does is it uses these stars, right? So these agents that sort of go out and take action on behalf of Sky, they are used to perform something called credit enhancement.
Yep.
Which means you basically like you sort of look at some asset, then you look at how risky it is, like, ooh, how risky is it? Very risky or not so risky? And then depending on how risky it is, you add kind of a buffer of security on top. And on sort of like the riskier it is, the more you need sort of a buffer to take losses, right? And actually, what Sky has done is basically the ecosystem of advisors, contributors, experts, researchers, all these people that have been working on since the beginning of Maker, right? It's a 10-year project at this point. So there's a lot of built up specialized knowledge. And from that, the ecosystem basically developed an extension of the Basel III like banking regulatory framework, right? That banks use to determine how much to credit enhance, basically. So and actually, when Sky deploys into TradFi assets, it's just directly copying Basel III. So it's just using the exact same risk, like the capital ratio. So basically, the amount of credit enhancement that banks have to use when they deploy into TradFi assets. But then when Sky deploys into crypto assets, basically it uses like an extension of the math of the formulas used to determine like loss given default and probably basically a bunch of math you do, and you basically use that to you get a final number that is like, this is the over collateralization. And so you take all those different assets, they're all sort of different. Some of them are more risky, some of them are less risky, but they all have like an amount of credit enhancement that makes them sort of equivalent in risk. And now you have like total freedom into deploying into any kind of asset. It can be super simple, it can be super complex, and you can find all the places where the yield is mispriced. So that's really what Sky is extremely good at. It's like a swarm of like robots that are just seeking out where are the good opportunities, right? And that's where your money should be, right? Not in some like, boring cookie cutter, gigantic institutional thing that is like, it's just dumped in there with everyone else, and then there's like middleman after middleman, right? It should, there's no reason why a normal person should not also have their money at the cutting edge, where the bankers with all the inside knowledge right now are sitting and doing their deals, right? Like with the power of AI, blockchain, transparent data, we can open that up to everybody, right? And simplistically, then that the way that sort of ends up being sort of experienced as the end user is just the yield is a bit higher, and then the question is it actually like as low risk as something like a T-bill backed stablecoin? And that the answer to that question is going to be, you'll have to check the math, basically, right? It's like a debate on the math, and right now that's kind of hard. But as AI gets more and more advanced, it actually gets easier and easier for people to sort of verify for themselves and figure out, do I want a government stamp of approval, or do I want to basically check the math and see is this a better risk-adjusted return?
Yeah. Absolutely. And this is a unique part of the Sky proposal for USDH, because not only are you able to generate that risk-adjusted return, people can check the math. You've also got somewhat of not a government stamp of approval, but you've got this S&P credit rating, which is a unique proposition of the Sky proposal. The other one that it seemed to be a unique proposition that I wanted to hone in on was the native buybacks that you had mentioned. You suggested in the proposal that you would bring that all onto Hyperliquid.
Yeah, and not only just that, Rob, the $8 billion balance sheet that you guys have, I think the exact wordage in this TLDR was it will be able to deploy.
So maybe you could unpack that. What does that mean? And mechanically, once that is deployed on Hyperliquid, if that's the route that's taken, what does that mean for whether it's volume, revenue, the Hyperliquid ecosystem at large?
So, well, let me just quickly talk about the buyback engine, right? So right now, Sky does its buybacks via Uniswap, and that's like, it's okay, but it's like not super efficient. And then being an ecosystem that is just obsessed with efficiency and finding ways to generate more value, we basically realized it will probably be more efficient to do the buybacks on Hyperliquid. So basically, then we were like, okay, what's that technically actually going to take? And then, of course, right now, Sky is not listed. Like, Sky is in the middle of a transition from the old MKR token to the new Sky token. Right. So Sky is not even listed on Hyperliquid yet. But then that would also just be naturally a good way to then bootstrap the liquidity for that asset once it gets listed. But yeah, I mean, what's actually interesting and what has, I mean, the thing that's always been the driver of like Sky's interest in Hyperliquid is the fact that Hyperliquid has a lot of interesting capital allocation opportunities, potentially with mispriced risk-adjusted return, which is the kind of stuff that we are all about in Sky, right? But what has actually held Sky back quite a bit is basically the USDC bridge, which was sort of the problem with that is it's like very hard to quantify the risk of a bridge of that nature that's sort of unique to a single system, right? So now that everything is getting opened up with the new stablecoins and all these different bridges, suddenly there's a lot more, there's just a lot more room to scale. And then obviously, if Sky ends up actually winning the USDH ticker and that becomes like a major component of the economy on Hyperliquid, then that would mean Sky would have like very tight control and ability to verify the security of the bridge, which would then really open up the floodgates for like how much capital Sky would be able to deploy into Hyperliquid. But actually so one thing is, right,
yeah,
there are these risk-adjusted return opportunities in Hyperliquid out there that Sky can use to generate a better return for USDS, right? But the thing that's kind of even more fun and interesting and cool about all this is that, like, well, you still have to go find them, right? You still have to go and do it. And this kind of goes back to the very first point I talked about, which is like the thing that really is cool about Sky that makes it so unique is that this is done through the stars, right? And so the way you sort of get this off the ground is you deploy a star, you get a star going. And the way you get it going is you set up a farm and you have people farm the token. So you start getting a community that can hold the token and that can actually control it and that can make the decisions around actually deploying into these good opportunities out there. Because then, I mean, you'd want the Hyperliquid community itself to be sort of the guide, basically, right? Being like, this is the good yield. This is where you go.
Yes.
This is where you go, right? So you're not trying to sort of remote control, like as a bunch of Ethereum nerds that don't really know that much about Hyperliquid compared to like the natives on Hyperliquid, right?
Yes.
And the really cool thing is, nobody works for free, right? In this kind of setup. Like the star gets to also generate essentially like what we call an outperformance, right? Like it can actually generate an even better return than the 4.85%. Sometimes 10%, 15%, right? And then it has to credit enhance, but often the cost of that credit enhancement is going to be less than what it will earn. So there's just sort of like opportunity and value going around everyone. And the reason why all this value exists is because like you're having people with different skill sets, different knowledge, and different resources coming together and combining them in ways that just creates, value where the whole is greater than the sum of its parts.
Yeah, and Rune, I gotta ask specifically about your level of interest and desire to actually bring significant amount of the TVL that you guys have onto the Hyperliquid chain. And the reason I ask is because a lot of that exists on Ethereum, which is very, I mean, look, Rob and I have been doing on-chain DeFi for 6 years, right? We were, very early in Compound, Yearn, et cetera. I know when I have money on ETH L1 versus I have money on L2s versus I have money on Solana versus I have money on L1 versus et cetera. In my own mind, I understand technically what I'm getting into as far as the levels of decentralization. And I also understand how I feel about that, the different capital in different places. With regards to Hyperliquid specifically, there is no escape hatch. And so an escape hatch, as you know, Rune, is effectively where you can basically brute force your funds out of a chain should the operator go down or should the operator become compromised. And in this case, it is somewhat problematic for some of the Hyperliquid holders. Like as a Hype holder, which makes up a significant amount of the portfolio on the liquid crypto side, it is still worrying that now obviously the validators and Jeff and everybody has set the precedent that they will roll things back should anything happen, like an Oracle exploit, like with 𝘱𝘭𝘵𝘬𝘭𝘵, right? So I think there's some level of like backstop here, but from the ethos that the generation that you were born in, into the space, and where Rob and I came in, we're much more on that kind of level of like decentralization maxis, kind of like very trust but don't, or verify don't trust, or I'm messing that up, but that's the point. What is your actual risk tolerance for bringing that $8 billion, I believe is what it is, onto Hyperliquid? Like how realistic is half of that coming on, or a quarter, or more? And what would be like a time?
So what's interesting is this is one of the ways that I really like just matured and completely like changed my view into something just very different from how I thought of this when I got started in crypto. And I mean, the fundamental answer is like, well, the answer is that I don't have the answer for that, because I'm just like a hairless ape, like I'm not really built to do super advanced data analysis and math to figure it out, right? Like, obviously there's like, you have to have a lot of intuition around, I mean, you have to make sort of decisions around things that are just like, this is off, or like, this is, they're like, sometimes you may not be able to quantify the risk. And this is actually something where like the thing of like having the single bridge onto Hyperliquid, that's the type of stuff where that's the kind of risk where it's just like, there's all the chips are in like one place. And there's no reasonable way to like go and be like, hey, can we take a look at the bridge, right? Because actually obscurity is a part of the defense, right? It is a part of the security of that system, right? So once you have multiple different bridges, then that's the kind of stuff where I think, okay, now there's like, from my sort of intuitive perspective, now there's like, surely there's an opportunity for something at real scale here. And then from there, I mean, the task is simple. You simply go end to end and gather all possible data, like literally all knowledge and data, everything you can possibly find about every single opportunity and every single risk. And then you try to put that into the existing risk models. And I was just about to like rabbit hole into like sky governance, but I managed to stop myself from doing it. But basically, there's like, well, there's very advanced ways we can sort of do this systematically. And then you put it into the risk models, you get a result. And then at this early stage, I mean, you also have to have a lot of like looking at like the final outcome and be like, like, all right, so we got this result, but should we actually go ahead with it? Or maybe like, is it too conservative? And like, is it actually maybe, clearly more, we could deploy more, right? And then like you sort of adopt, you improve your models again and again over time, right? The more you use the system, the more it sort of learns about its environment, and then it just increasingly gets a little bit smarter. And that's like governance done the right way, right? Maybe that's even something to kind of like take away for the Hyperliquid community of this process now, right? That it's very important that every time you do sort of a governance cycle, you like write down what you learned from that, and you kind of are like, okay, next time we're going to do this, let's make sure we don't start from scratch, but that we sort of start from like the high point of like all the knowledge we gathered around this process, right? Like Sky is basically that, except 10 years of that, of just over and over and over, like building up the sort of decentralized brain of the protocol.
You could say the agentic brain of the protocol now with the stars. Are you sure there's not a half humanoid inside of you there, Rune? You're still human? Can we get a double check, a little knock on the head here?
Oh yeah, no, I'm very much human.
Well, Rob, I think we're at a good stopping point. Do you want to just do some closing thoughts here?
Yeah, Rune, please go ahead. I mean, you put together a very comprehensive proposal, and we appreciate you taking the time to explain it to us here as well as our audience, and would love just, some closing thoughts on how to wrap this up and generally going forward your plan with Hyperliquid.
Yeah, if you win, if you lose, kind of where's your head at?
I mean, obviously it's going to be super exciting if we win, and just really, really epic. But at the same time, I mean, like I said in the beginning, this has been like a really fun, amazing process for us. It's like there's been so much awareness, like so many people wanting to learn about Sky, and sort of, I mean, Sky has this sort of impenetrable thing, right, where it's just so much that people are like, they're scared to dig into it. But now that it was presented in this sort of tangible way of like, wow, here's some real stuff, some real benefits, there's actually been a lot of people that have been trying to sort of get into it and learn from it. And I just think like the level of like, I don't know, the energy, the positive nature of the Hyperliquid community, I really think has like amazing potential. I see it as like raw material, some kind of like raw, what do you call it, diamond in the rough kind of, that if it was able to embrace the type of governance mechanisms and technology that Sky has, you would really be able to just like direct that energy in incredibly powerful ways. And I mean, we're going to do that with the Hyperliquid Star. That's going to be kind of like the Trojan horse that's going to begin to introduce the highly structured governance mechanisms of Sky to Hyperliquid.
Yep.
And that's whether or not we win.
Rune, last question. How will you celebrate if you win?
I will go back to work. I'll celebrate by working more.
There's a robot in there somewhere, I'm telling you. Watch out, guys. Rune Christensen, Sky's vision for USDH. Appreciate your time, man. It's been a pleasure. Look forward to the next 24-ish hours. It's going to be a fun time.
Absolutely. Thanks a lot, guys.
Thanks for your work in DeFi, Rune. Appreciate you, man. Alrighty, Rob. Man, I looked at the Sky chart. It's at 7 cents. I'm going to pull up a little bit more longer time frame here.
So it had a Sky chart. I'm looking at the hype chart. We are not.
It had a gnarly pullback from. I mean, it's really just gone sideways, dude. This thing could be a sleeping giant.
I mean, MakerDAO has always been a sleeping giant. You gotta if you're looking for, I mean, if you're looking at see,
market cap's 1.7 bill, so it's definitely not. Oh, but it's full. It's fully vested. It's fully unlocked. This thing looks good, dude. If Sky wins, this thing sends.
Oh, Andy, I think
this
I lost you.
It's gonna go crazy if they win.
Oh, you're back. I mean, so it's kind of funny. I'm looking at hype too.
You get the new MacBook as well.
I think so too. CoinGecko's eating up all your data. Yeah, guys behind the scenes. Let's make sure Andy's connection's doing all right. But otherwise, I think you're right. I think Maker's obviously been around for a very long time, doing quite well. We've got our next stablecoin evangelist behind the scenes. He's going to come up in just a moment. We're going to get him on after we confirm Andy's connection as well. It's been just one after another firing USDH proposals right to you guys. And so we're gonna switch it up a little bit. We're gonna stay on the stablecoin train Andy, my trusted co-host, is back. And so we're going to bring up Lorenzo here
Yeah, I'm back.
in just a moment. Welcome back, Andy. Just in time to speak with
I'm
Lorenzo.
back. Yeah, man. Let's get him up. This is crazy. They just said that they're not going to do a proposal. So
yeah, let's hear why.
They're the only ones. They didn't think they could win. They could match the battle firepower of Ethena and such. So, guys, let's get him up. Let's get Lorenzo in the shot. Lorenzo, give us one quick sec, and we'll get started.
There he is.
Yeah, pretty big news today for USDT Zero. Lorenzo, good to have you. First time on the show. Would love to know just a bit about yourself, man, before we jump in. Who's Lorenzo? What's USDT Zero? What's your background? Good to meet you for the first time.
Yeah, likewise. Pleasure to meet you both, Robbie and Andy. It's pretty cool to be here, and it's the first time I do a live stream, at least related to crypto. So super cool, and thank you for having me. Yeah, so my name is Lorenzo. I'm one of the 3 co-founders of USDT Zero. I don't know how much you guys know about what we're doing, but we're basically one of the leading solution to move USDT tokens between networks. We launched the USDT Zero back in January. The way you can think about it is basically a new standard towards which Tether tokens can expand to other ecosystems. Since then, we've moved more than 12.5 billion USDT between networks. We're currently sitting on around between 50 to 150 million USDT moved between our supported networks every day. It's been quite astonishing. We were not expecting such a rapid growth, but we had a lot of help from all of our ecosystem partners, and et cetera. So pretty cool. I'm a DeFi guy myself. I've been working in DeFi since 2020, so pretty OG in that sense. And for the last 3 years, I've been focusing together with my co-founders on Tether-related products. We helped out on a bunch of native deployments. We shipped a product together with Tether called 𝘗𝘳𝘺𝘗𝘕, which is basically a stablecoin backed only by gold in a as decentralized manner as possible compared to a Tether product. And then for the last 15 months or so, we focused fully on launching and executing USDT Zero, which has been really fun and really exciting. We are the canonical USDT on a bunch of big networks, Polygon and Arbitrum, Hyperliquid, Unichain, and so on and so forth. We also going to be the canonical USDT on Plasma. And yeah, that's a quick 2 cents, I guess. Doing our best.
The attention, people want to communicate, they want to learn about it. Obviously, everyone's really stoked on Tether. That's a no-brainer based on the growth, Plasma, and now Hyperliquid. So we'd be remiss to not cover what's just happened right now. So USDT Zero account at 3:18 p.m. Eastern time tweeted, since our launch, USDTO has been deeply aligned with Hyperliquid. We're the largest stablecoin on Hyper EVM. We run a validator. We've consistently supported the growth. Our commitment to Hyperliquid and its ecosystem is not tied to the USDH vote. We are not submitting our own USDH proposal, but we will support USDH and continue to give the ecosystem it has come to expect from us. We will continue to remain committed and good stewards of the ecosystem. Guys, this comes after Ethena, Sky, Paxos, Agora, and everyone else. So there's kind of 2 elements to this conversation. It's 1, who the hell are you guys voting for and why, if we can talk about it? And 2, why aren't you guys being a part of this? So why don't we start with the second part? Why choose to not be a part of the USDH proposal race? What's going on in your mind? And kind of what is the state of your view as to why that you guys chose to opt out?
Yeah, I mean, our stance is pretty straightforward, right? Like as we said, we are the largest stablecoin provider on Hyper EVM itself. We have more than 200 million USDT Zero issued on the network. We have been deeply pushing the Hyperliquid technology layer as much as we could, meaning that, I don't know if you've seen, but the Hype USDT pair on spot side of things was one of the very first time that somebody could pair a volatile asset from Hyperliquid against something that is not USDC. And we have had very deep discussion with the Hyperliquid team since the moment we got into the picture. Hyperliquid is one of our core pillar of the ecosystem, and we think it's just gonna go parabolic. Like the whole ecosystem is rallying behind it, and it's just been very exciting, and we want to keep doing that. When it comes to why we decided not to play this big game is because, well, first of all, we think that we already have a very good stablecoin for the Hyperliquid ecosystem. It's called USDT. It's the most used stablecoin in the world. It's the largest stablecoin in the world, as well as the one that is preferred by basically every single trader on planet Earth. And we thought that the whole picture was just getting too crowded, and we had nothing to add towards it. And it was just very exciting for us to see all of these other behemoth in the space. You had Rune before me, Paxos. We had very deep discussion with Ethena about the proposal that they posted, which it's also very interesting. And we want to see how it goes, right? Like we want to see how the ecosystem is taking this on. We want to see how we can help them out to develop this thing. And we are very confident on the fact that developing a stablecoin is hard. Reaching economies of scale, reaching distribution, et cetera, is not an easy business. And we're watching this very, very carefully. And we are, as we said, we're Hyperliquid first. When whatever is going to benefit the Hyperliquid ecosystem, we'll be right behind it. And whoever the community chooses to actually support in this proposal, we are super happy to work with them to make it a better place for users, basically.
And I gotta follow up on the second part of Andy's question. You guys run a validator. You said this as part of the tweet where you said that you're not submitting your own proposal, but you do run a validator. Yeah, which means that you have a vote.
We do. So we run a validator together with Luganodes, which are some of our closest partners when it comes to the validation side of things. They're amazing. We love them, and we're still evaluating the options. To be very, very honest with you, I think I don't want to sound salty or anything, but I think this is a very, very we have a very little time frame where we can actually make a decision, especially so important for an ecosystem like Hyperliquid. So we're taking all the time we need. We are evaluating options. Ethena just came up 2 hours ago with a very interesting proposal. I was speaking with Guy about it. I think it's pretty interesting. Paxos proposal is also very nice. The native markets one is exciting. So we're gonna take all the time we need, and then we're gonna do what we think is best. But again, we want to be a part of this ecosystem. We are chosen to be a part of this ecosystem, and we'll do everything we can to make sure that we securely play a role in it, but without rushing it. I don't like rushing to, especially to being something so large as we are. We want to take our time.
So you didn't mention Agora or Frax, but you did mention Ethena, Paxos, and I don't believe you mentioned Sky. So
native markets.
And native markets. One could then deduce that your current top 3 is Ethena, native markets. And
don't deduce. I just said that the first three that popped into my mind and the one that I had the time to review it. So and in the little
so you have no public rankings that you're wanting to think about, or you have no idea here.
So rather than disclose like who you're considering, I'm curious because something that we've seen across all of these proposals, and I think we've had maybe 4 out of the 5 or 5 out of the 6. The only one that we haven't really spoken to is Guy from Ethena. That one just came out a couple hours ago, and then native markets.
Yep.
And so, given that you guys are an interested party, you have a vote, you're affiliated with Hyperliquid and aligned with the community, but you are objectively looking at all of these proposals because you haven't submitted your own. We've also been taking a look across the swath of proposals. There's a common denominator across most of these, almost all of these, except for 𝘱𝘭𝘵 and Circle's non-proposal, has said that there is a revenue share, and it's effectively essentially all of the revenue goes back to the Hyperliquid ecosystem. Yeah. But each of these proposals seems to have a uniqueness to it, right? Sky has a Hyperliquid star that could get enabled. They could bring a significant portion of their balance sheet. Ethena obviously has network effects, and they have their own novel mechanism. There's Frax has Genius compliant. Agora has rain cards and State Street. There's all of these have some unique properties to them. And I'm curious, what sticks out from your perspective about some of these proposals? Is there anything that does stick out about highlights that you've seen across the different proposals that have piqued your interest and said, oh, this is not just some table stakes revenue share agreement. This is actually a unique value proposition that this proposal offers that the other proposals don't. What are some of the things that stick out?
Very good question. So I had only enough time to review the largest ones, and again, we have had so much stuff to do, especially with the OKX announcement, that we want to take as much time as possible. But for me, the most interesting thing for me is not really the unique of each one of these proposals, is the fact that a whole entire industry mobilized themselves in 5 days with behemoth to the sides of Ethena, USDS, and so on and so forth, to basically try to get what effectively is just a ticker, right? Like that for me is what I think is the most interesting thing, and just it's a testament to the power and to the success that the whole Hyperliquid community put into this industry, and how amazingly they're handling these situations. So I think native stablecoins for specific chains are something very, very hard to get right. In the history of crypto, very few ecosystems managed to get one right. One of them was BUSD before it was unwinded, which was very impressive. Unwinding a $25 billion stablecoin is something very, very cool. And at the same time, again, we are heavily looking at every single one of them, and we want to be somewhat agnostic right now because, again, we are here for Hyperliquid. We think Tether should be, and USDT0 should be one of the pillars on which HyperEVM and maybe in the future Hyperliquid itself is built. And we just want to work with whoever the community picks and decides to work with.
So,
from a general alignment perspective, we're obviously very, very close to Ethena. They are aligned to the USDT and so on and so forth. But all proposals, as you said, have merit and their unique twists around it.
So on that point, then, why, from your perspective, has Tether not submitted a proposal on USDH?
Well, that's something we should ask Paolo altogether, I guess. But on our side, if you want, so we should ask him. But to me, like, that's usually not how USDT0 deployments operate, right? Like we want to be a part of the ecosystem, but we also want to let the ecosystem pick their own fate. And if anybody wanted to include a heavy USDT0 backing their proposal, they could have. And if they haven't done it, there's probably good reasons for it. And we have been bouncing ideas off with basically everyone who posted one of these proposals in the last 5 days. I had a very fun weekend, if you want.
Yeah. Sure. Did anyone reach out to you to have you join their alliance?
Yeah.
Of course.
Yeah, but none of. Yeah, quite a lot of people did, but for us, like the value prop wasn't really there, right? For us, it's what can we do to benefit the Hyperliquid community and benefit our ecosystem in a streamlined way. And when everything ended up and all cards were played, or at least most cards were played, because we don't know if anyone else is pushing proposal out, we realized that our best bet and the way we could have served the Hyperliquid community better was just to be agnostic and be like, hey, we're going to be the backbone. We want to be the backbone of this ecosystem, as Tether is the backbone of crypto in so many other ecosystems. Again, and we don't want to pick a side. We want to let you guys get your own decision, figure it out, and then whoever you pick, we're here. We want to work with you. We want to push forward basically the technologies that we're developing specifically for Hyperliquid.
And I think Rob and myself as Hyperliquid holders, as well as the broader community watching, appreciates your kind of angle on this. It's less about let's make USDTH something for to be in the proposal mix, but more so let's just take a stand for the community and have that community oriented feel. And so one thing that happened was, and that I'm curious about, that we just kind of spoke about, as Rob mentioned, there's table stakes for a lot of these things. One of them is that the revenue back to the Hyperliquid community is 100%, or back to the Hyperliquid AF, the assistance on. Paxos, I have a clip of me asking him why they chose to do 95%, and I assume this applies to Ethena as well. And he responded in saying that there needs to be some sort of incentive structure for the entity that's running this stablecoin and managing it to be able to want to keep growing it and scaling it and keeping it all in their business line. Do you agree with this take? Do you think he's being greedy? Do you think that there should be a little bit given back to the entity that's running this? How do you reason about this 95% or 100% mark when it comes to the revenue generated from the stablecoin being given back to the community?
Another very good question. Well, I don't think he's being greedy. I think making a stablecoin be successful is extremely hard. And I am not a big fan of bringing the yield back to its users just because I am used to an ecosystem, which is USDT ecosystem, that has a very different use basis from all of the people that are generally using what we call the DeFi stablecoins or something like USDC, right? Like tethers and USDT holders' main reason of using USDT is not to get that additional 5% more a year. It's to save themselves from 100, 200% inflation a year, right? So our user base and Tether's user base is very, very different from any other stablecoin provider. And that's also why I think Paolo and the rest of the Tether team did such an amazing job in the distribution layer that they accepted, because they have something that no other stablecoin in the world can actually have right now, which is people holding their token without anyone paying them, but just because of pure utility. I do think, though, as a personal view, that if you are building something that is native to the USDH, to the Hyperliquid community, something like USDH is meant to be, judging from the announcement that they made, it does make sense to bring back some of the revenues to its community. I also think that it's extremely hard to make revenues out of a stablecoin if you don't have the distribution networks, and any new stablecoin will have a big problem to reach that. A wise man once told me that making a stablecoin that is up to $4 billion in market cap, it's something quite easy. Like you can do it. From 4 to 10, it's very, very hard. Above 10, it's absolute madness. And only few entities in the world have managed to actually do it properly, right? But because of the way the stablecoin business works, if you're just relying on T-bill yield, to get reasonable revenues, you have to get to those very big sites. And then if you're bringing back all of that firepower back into the industry, yes, it's good for the industry, but at the same time, you have a trade-off here, right? Like you have a trade-off between how do I enshrine something in the ecosystem without forcing my users to use it. And that's also part of our reasoning, right? Like our stance is that if you're running an exchange, you need to have USDT usage. Every single exchange in the world has USDT usage. And if you force your users to use something else, you're leaning on this trade-off towards okay, I'm having more issues on a stablecoin, but at the same time, maybe I have some kind of a trade-off when it comes to the usage of the actual exchange. And which is why our take is it's going to be a hard thing to do. If there is a community and an ecosystem in crypto right now that can get it right, it's likely Hyperliquid, because they've been rewriting the rules for the last year and a half, basically. And we're just watching it very, very closely. And whoever decides to do it is going to have a friend in USDT Zero, most likely, because again, we're here to make Hyperliquid community life better. That's what we kind of do as our mantra.
Lorenzo, before we wrap, I want to get your take on something that we've seen. This is, again, stablecoins. It's on the idea of stable chains, but it's a bit adjacent to Hyperliquid USDH. And that's, we've seen several stable chains come out. Tempo, obviously, most recently, backed by Paradigm and Stripe, but then also Plasma, Stable, USDO. Like all of these are chains that are pushing stablecoins, and you guys are right in the thick of it. And so I'm curious, what do you think is going to separate these chains from one another, especially ones that are primarily focused on pushing Tether, right, USDT? And so there's not much differentiation on the asset or the stablecoin itself, but it's all about the payment chain. How do you think, we're going to find differentiation? And when you see some of these other ones launch and you're looking at competitive advantages, how do you see this competitive landscape shaking out?
Yeah. So think about it like this. We are the canonical USDT for both Plasma and Stable, right? Both teams are extremely competent, and they chose very different design choices when developing the chain, right? Like, for example, on Stable, there is USDT Zero is actually a gas fee token, while on Plasma, it's more of a zero fee transfer for USDT assets. Both things, the thing that both have in common is that they're trying to remove as much friction as possible between the end user that is using Tether and anything else in the system. To answer your question, I think the thing that will set them apart is execution. Now, I'm going to be very honest with you. Few times I've seen chains executing as good as the Plasma team has been executing. Plasma will launch with 2 billion USDT Zero supply from day zero. So the moment the chain goes live, there's immediately going to be 2 billion USDT Zero live there. And this is something amazing and something that you would not be able to do with basically any other technology. And it's extremely cool to see it happen built on our tech, because when we designed USDT Zero, we designed it for chains like Plasma. Like our pitch is always the same. we think barriers between networks are ultimately hurting users, and we want to remove them as much as possible, which is why you can move 1 USDT 0 or 100 million USDT 0 or 1 billion USDT 0, and you're still going to pay the same amount, which is absolutely zero other than the gas fee. I don't know who will win. I think it's pretty clear that this cycle narrative is stablecoin and stablecoin aligned chains. Everyone is building one. I have few hopes on anyone that is building something not based on USDT, just because if you're building a stablecoin payment chain, you want to use the stablecoin that is used in payments every day all over the world. And one more thing that I will say is that some of these chains, I think they're missing the point. To go back to what we were discussing before. I live in Switzerland, right? I use stablecoins in my day-to-day life, but stablecoins are not meant for me. Like, I can get a bank account in 10 minutes if I want to, most likely, and I still find ways to use my stablecoins and so on and so forth, but they're not my tool. They are the tools for people in Africa, Latin America, India, Asia, that are left out by the traditional financial system and traditional banking infrastructure. And that's why they rely on USDT. So in my opinion, the chain that will win is the chain that will focus on the areas of the world that are really in need of stablecoins, which are third world countries and countries where the banking infrastructure just doesn't serve certain people because it doesn't benefit them.
I mean, did somebody say trillions? Did I hear trillions?
Yeah, you said trillions as soon as possible. We are at 0.002 trillions now, so we're working on getting the number up, but I think we're doing a pretty good job, and it's going to be exciting. I mean, Plasma is coming. We all know it's sometime soon, I hope. I may know something, but if I say something, Paul and Nathan will kill me, so I don't know when, but it might come up pretty soon, and we're going to be very excited to see how that plays out.
Yeah, man. Last thing for you that I think is relevant is we're right now in a very elevated rate environment in terms of the U.S. federal funds rate. Right, we're expecting rate cuts to come in about 10 days or so, maybe a little around 2 weeks or so. And that has an impact on yields in DeFi in different ways, as well as on different mechanisms. So what I would expect is that rates come down, it increases speculative behavior, the demand to borrow stable coins in lending markets like Aave, Morpho, et cetera, increases, thus increasing the lending rate on stables. While also, to the contrary, stable coins that are like more mechanically based, like Ethena's USDE, they are a beneficiary of this speculative behavior for their basis trades with higher funding rates in a lower rate environment, which kind of separates them from the others. You know, I'm curious from your perspective of the Tether perspective, and even, you know, holding from the Circle perspective and USDC, how do you envision this playing out, where right now there's definitely people that are trying to launch stable coins that want to give yield back to the owners and, you know, kind of cut Tether's margins, or kind of try to undercut Tether and Circle and whatnot because they don't pay back yield. How do you think about this dynamic as it relates to the changes of the macro environment, where stablecoin yields will theoretically come down just from a pure U.S. Treasuries perspective, but also potentially increase in DeFi, such that the actual yields in DeFi, due to speculative demand for at least a certain period of time, will likely be higher than the federal funds rate, and thus making it more attractive? How do you kind of reason about this?
I think it's a pretty good assessment. My main thing is that it's very tricky for me to understand really all this giving yield back, because we work on a day-to-day with a completely different user base, as I told you before, which is also something pretty cool. If you have very low cost and you don't give the revenue share back, it's likely something that, like, your users use you because they want to use it, not because some other macroeconomic scenario. So if yields go down, who knows what other solutions are gonna, how the effects on that happens, right? For me, and again, I don't want to speak for Tether directly, but in my opinion, every single time that the market pumps, Tether market cap goes up. The reason is pretty simple. People want to buy Bitcoin when the market goes up, and the easiest and most efficient way to buy Bitcoin is through USDT, which is quite different from the behavior of other stablecoins, right? Like, other stablecoins usually grow when markets go down because people sell the Bitcoin and try to save in USDC or whatever, right? The USDT system is very different. Yeah, I don't really know how to assess that whole scenario. Usually, rates going down to me means that as you said, DeFi should kind of bloom again. I remember when in 2020 we had like 30% yield on stablecoin. Everybody was like, that's pretty low. Let me just loop my USD anchor yield 50x just so I can get 120% of my stablecoins, right? Like that's a pretty fun period. But for me, stablecoins have always been something different, and they've been a financial tool that gives hope to people that doesn't have it, and that's what we're trying to build very, very much on the Tether and USDT0 side of things. At the same time, again, we are a little bit more DeFi native than other Tether departments, if you will. So we always want to make sure that our technology is best suited for that. And by the way, the moment USDT0 launched, it opened up a whole bunch of different farming strategies for a lot of large funds or certain DeFi funds, if you will, that are looking for yield against their USDT, because now you can move them between networks without having to pay 50 bips, which eats up in your margin quite a lot. Yeah, so that's kind of how I'm seeing it. I'm going to be very, very interested to see what happens when rate goes down, because it's all easy to run a stablecoin when rates are up and everybody's making money. But the only people that were running stablecoins when rates were not this high was the Tether guys. And they were
I find it to be funny because it's like everyone's so bulled up on stablecoins and so excited about them because rates are high, because they see the
right,
because there's so much to earn. But that pendulum's going to shift right back to volatile speculative assets as soon as rates, if rates get cut in half, the stablecoin business model gets cut in half.
I think what could happen here is that the stablecoins that too big to fail stablecoins, if you will, are going to end up almost having the ladder pulled out from under them, because you're right. I mean, I think both of you guys are right. Like the yield delta here for them to capture is going to be compressed. It's going to come down. But if we're still going to inject trillions into the supply, it doesn't matter if the yield if the delta is that small, if we increase the capital base. And so I think this is what's going to end up happening, but most of that's going to flow into the biggest of big stable coins. And those are the ones that are going to end up winning from some of these inflows.
I agree. I also don't think that we're missing up something that is quite cool that is currently happening, and something that the whole Tether team is pushing very hard, which is other denomination of stablecoins, right? Like, I don't know if you guys have checked it out, but one of the coolest things, in my opinion, that is currently happening is that we're seeing a reignited demand for Tether Gold. I don't know how familiar you guys are with Tether Gold, but it's basically a stablecoin that, rather than being denominated in US dollars, is denominated in ounces of gold. And it shows a direct relationship with the bar of gold that technically you effectively own, that are held in Switzerland in a vault in a very safe country. And for me, that is the perfect stablecoin for DeFi, right? Like I never really liked having US dollar exposure as a European myself, before I understand how economics work. But as someone trying to build a decentralized system, I never liked this reliability on a single point of failure, which is the US market. And Tether Gold is kind of a fail-safe to that, right? Like, on top of bringing gold on chain, which is very important, it's also opening up a full other arrays of possibilities, if you know what I mean, right? Like, what if we start denominating all of the major pair against gold rather than US dollar? Because we think of gold as a volatile asset, but the US dollar is also a volatile asset, just volatile the other way around, if you think about it. And I'm just very, very excited about that particular thing. And in my opinion, we're going to see a ton of demand for gold-backed stablecoins in the future. And I'm very happy to be able to contribute to the Tether Gold ecosystem with 𝑥AUT0, which is the same thing for USDT0, but for Tether Gold, on all the chains that we're launching on, because I think it's going to be the next big thing.
So wait, could you just put the stablecoin backed by gold thesis into like 30 seconds? Could you just explain what is the stablecoin backed by gold thesis?
I mean, it works in the same way as USDT, right? Like, you give them $1, they give you one USDT. In this system, the way it works is that for each 𝑥AUT in the world, there is 1 ounce of gold backing it in a vault held in Switzerland, which is pretty safe historically in terms of geopolitical stuff and so on and so forth. And then it just allows you to move the historical success that gold always had in the history of humankind on blockchain technology. And it's pretty difficult to go around even these days and try to pay with a bar of gold. But if I can start moving all payments in a gold denominated tokens on chain, that makes it way, way easier. And on top of it, I can save in it. And on top of it, I can take that token and put it into DeFi. I can collateralize, I can borrow against it, I can collateralize a stablecoin with that. I can do all kind of stuff that is, in my opinion, extremely exciting and something that really is important for the way at least I am seeing this industry. Like, I think the second best thing after Bitcoin to save in, letting go the speculative part of it, etc., is actually gold. Because during the Roman Empire, with an ounce of gold, I could buy myself a pair of sandals, a tunic, and a fucking sword. And now I can do the exact same thing. I can buy myself a gun, a pair of Nike trainers, a couple of trousers, a shirt, and I can still have my purchasing power basically intact. If not even more, like it's going up. All gold hit our all-time high yesterday. So that's what I think is going to be extremely powerful. And we know this is not something that's going to happen in the next 2 months. We're building those railways up for the next 5 to 10 years. And that's why we're also expanding xt0 so heavily. We launched it on Polygon. We launched it on Ton. We're soon going to launch it on all the other major. We launched it on Hyperliquid, by the way. You can buy gold spot on Hyperliquid right now on the XAUT USDT pair if you want to. Hopefully, you're soon going to be able to use perps on it. And Tether team is pushing very hard on all the centralized exchanges to create those deep liquid markets.
Beautiful, Lorenzo. I mean, we appreciate your time, and thanks for that explanation with regards to Tether Gold. It's been a fun conversation, and dude, stoked to see how Plasma goes. Stoked to see how this ends up. And looks like you have some proposal reading and internal conversations to be had.
Yeah, unfortunately, yes. I wanted to have a nice weekend, and I got stuck into reading Google Docs for the whole Saturday and Sunday. So it wasn't fun, and I guess it's gonna end up like this for the rest of the week.
As Hyperliquid community members, we have faith in you to make us proud.
Yeah, we'll do our best. We'll do our best.
𝘱𝘭𝑢𝑔𝑚𝑛, stay winning, brother.
Oh, as always, man. As always.
Alrighty.
Have a good one, guys.
Man.
Thank you so much.
Thank you, sir.
Peace, brother. Alrighty, Rob. Man,
What a day. We're not done.
Stream so far.
We are not done.
What a stream.
In about 10 minutes, we've got Hyperliquid King,
We're gonna hear the Hyperliquid
Ryan
thesis.
Watkins.
In the meantime, we're gonna play our theme song.
Do we have embedded music?
I don't know. Can you hear that?
I can hear it.
It's embedded, baby.
All right. How should we pass the time? We got about 10, 12 minutes.
Listen to some tunes, man.
That's a vibe.
Let's check the market.
Market looks pretty hot. Hyperliquid is obviously doing well. IP saw a funny tweet today.
Dude, IP at $11. Storage
It said-
protocol.
It said I just sold all of my hype and bought IP. The reason being that Hyperliquid's revenue is down from 250 million to 200 million today, and IP's revenue is up from $43 to 147.
Dude, okay, but there's been some crazy pumps. Did you see MYX?
Crime.
Yeah.
I saw it. I don't know much about it, but I heard it's crime.
I mean, dude. So, yeah, hype all-time high. Obviously, this is like the biggest marketing moment. IP goes to all-time highs, $11.
Pump looks pretty good.
IP is going to be the talk of the town at KBW. I mean, that is just, everyone is going to be riding IP. Pump looks silly. Pump is ready to explode. That thing is just, yeah, that thing's going straight to a cent, 2 cents. I mean, dude, the market looks good. Ansom's bearish, though. It's just crazy. Maybe he's going to be right. Maybe this rate cut stuff scares the market. But dude, you see WorldCoin? So Tom Lee bought WorldCoin through in Bitminers. Like in Bitmine, he bought $20 million worth of the DAT that WorldCoin is running. That thing's at 87 cents on Thursday last week, $1.80 today.
Wow, it's a 2.5x.
Yeah, not bad, huh?
In a week. Our boy Jordy is doing big.
He called that.
Big thing.
So did the Coin Fund guys. I had the Coin Fund guys back when I was in New York, and they called that too.
One fix from what we said earlier in the stream. The rate cut is supposed to happen next week, not Tuesday.
Yeah, the 18th or the 19th?
17th. Next Wednesday. So we'll see how that goes. The rate cut environment, I think, is going to look. What I think is happening now, that obviously the market is pricing in 25 basis point cut, front running that. Ansem and the rest of them are probably looking at this and they're saying like, look, okay, we're front running this 25 basis point cut. If we end up cutting 25 basis points, where does the market go from here? Well, it's already priced it in. It doesn't go anywhere. And I could see how that could be somewhat bearish in the midterm, or at least on like a month timeline. What I think people are under indexing on is a 50 basis point cut. Prediction markets, I think right now have it at like 18% chance, maybe 20% chance.
Yeah.
And if we get a 50 basis point cut, I think we floor it. I think we pump hard. So again, that's a 20% chance. I think no one is really pricing that in. And everyone's pricing in this 25 basis point cut. That's basically a certainty at this point because the labor market has softened. But I think there is a significant chance we get a 50 basis point cut. And I think if that happens, all bets are off.
All bets are off? What does that mean, Rob?
I think we go higher.
Okay, cool. Good to know. Good to know, sir. Man, what a wild 2 days. I mean, we got Tyche Media falling on personal. We got big names coming in on the Rollup account. We got Vance calling for $500 for a hype. What's going on out there?
I wanted to get your take on something Vance said about cycle thinking.
Okay.
Because this was in reference to, hype to $500, maybe $1,000, but also in reference to this idea that first gold, like the cycle is not necessarily there. Everyone's got different cycles in their mind, right?
Yeah. And
so the facade that Vance chooses to believe in is the cycle of first gold, then stocks, then coins.
Yeah, he tweeted it yesterday. It's pretty bullish. I mean, look at stocks. Green, all-time highs.
But also look at gold.
Where's gold at today?
It's also at an all-time high.
I mean, it looks insane. Gold looks insane. Yeah, Bitcoin's lagging, huh?
Coins were decoupled for a time in the market. That was maybe like a month or two ago. Arthur called it. He called the decoupling, and he was right. But now gold and stocks have caught back up, and now everything's correlated again. So I think the question is, where do we go from here? And I think if we're looking at gold and we're saying like, look, like this is where the inflows are coming in, I think it means that we haven't quite seen. It's almost like majors and then large caps and then altcoins from there, right? On a broader basis, that's gold, stocks, and Bitcoin. And if gold is still pushing all-time highs, it means we haven't yet seen the type of rotation that we would expect from stocks. And then once again, the rotation that we would expect into Bitcoin. And then from there, the rotation into large caps. From there, the large cap rotation into alts. And so I think it's not necessarily the case that like cycle thinking is invalidated. It's just how we choose to measure these cycles. And I think there is a case in which you could see like a phase shift, right? Like a sine wave that shifted to the right, where the cycle isn't necessarily just, a year after the halving, which classically was the cycle that I believed in, because it was the cycle that was right from 2013 to 17 to 2021. But even just a sample size of 3 is still very small. So I think there's
what
a
are you
case.
saying? So when I was like, hey, but taking chips off the table makes sense to a lot of people. He was like, okay, well, that's one way to think about it. So how do you reason about managing your own personal portfolio while also maintaining this long-term bullish view, but also not wanting to take a 70% drawdown?
I mean, I think you and I tend to agree on this, on the way to play the game right now. And it's this idea of Nash equilibrium. I'm not going to go on some long-winded thing so we can get off solo shot, but I think
yeah, you are. Go for it, buddy.
No, I think you know, there is, again, like this risk-adjusted return that Rune was talking about, but on a personal net portfolio basis, where if you sort of take like a kernel of truth in each of these guys' theses, then you know you see this gold stock Bitcoin rotation happening, and it would mean that we are yet to see this big increase in Bitcoin. And so I think once again, you just don't want to mid-curve it. And you could look at, you know, some of the large caps like Hype, Pump, IP. Some of these are doing quite well, but they're still new coins. And so I think there's these different sectors where there's a thesis at play. And it's no longer, I think mostly the takeaway here is that it's no longer the case that everything is pumping at once. It might look that way, like from a 30,000 foot view. But I think the way to look at this is like, you know, you want to kind of be in capital preservation mode. And to me, that means Bitcoin or gold. And then with the capital growth mode, which is kind of the other part of the portfolio, you go into full Nash, like, you know, you kind of have your stack of chips, and then if you're playing with some house money, then you go all in with your house money, and you basically develop a thesis, and you shove when you believe and have conviction in a thesis. And right now, that looks like Hype. I mean,
yeah, I mean it is Hype. I mean, we full shoved that thing pretty hard, and when Vance was buying down at $10, we were holding on to our butts. So, you know, it's funny. I saw this guy Jez on Thread Guy's stream.
Yeah.
And he was like, the best way to make it is just a full port. And dude, I mean, he's like, dude.
I want you. I hope it's clear that's not what I'm saying.
I know we can't go back in time and full port Hype, but if we, first of all, my biggest regret of the cycle is not, dude. I can pull up our group chat on Telegram right now with Hyperliquid, and I can scroll back to freaking
I know
August 11th, 2023. Robbie, my freaking business partner, makes a group chat because he meets them at a conference. Great. Okay. I started
fade my network, bro.
One trade on that damn day, and just one trade a day. You send him analytics. We take a call with him. I'm on my way to 𝘱𝘭𝘵𝘬 in a bus with the worst possible signal, and I'm with this girl Zoe, and I'm going to see my buddy Lawrence, and I'm like, I can't even remember, I can't even hear this guy, but Julian's like telling us that we should do the affiliate program, and we're like, dude, we need revenue. We don't need affiliate program. We need revenue now. And then here we go, and then so we fade that, and then he sends us more in October. We fade that. Points program will begin November 1st. He sends us the tweet saying the points program is going to begin. And we fade it. And then he says he releases something new in Istanbul. Hope you had a great time. I'm supposed to have a meeting with him in Istanbul. And I was probably too hungover. And I missed it. Dude. And then the token launches and we don't even size up enough. Just like generational.
I mean, we sized up about as much as we could.
Generational fumble on Hyperliquid points. I mean, it couldn't have gotten any easier for us. I probably tried to airdrop farm 30 other damn protocols this year. And like, last year, how did we not do this?
I forget where I met him.
Dude, it was in August of 2023, which was not ETC.
August?
Yeah, August 2023 is the group chat.
I don't know. Doesn't matter. We sized up in Hyperliquid.
That's
I mean,
good roll-up lore, though.
It is.
Yeah, I mean,
it's great roll-up lore.
I mean, we are definitely sized up. So
how did
like Vance, we did not buy in at 50. I think our first buy was like $2.10.
Yeah. How did we fall back into into this. We're not sitting here talking about Hyperliquid regrets. That's for sure.
No, we got Ryan. We got Ryan Watkins coming on stage in a few.
Yeah, give him a minute or two.
He is the co-founder of Syncracy. He is one of the active liquid investors in the space. They are doing a lot. He's basically giga bullish Hyperliquid Ethena. Want to get his two theses on that. Want to understand what Syncracy is, what his fund is all about, kind of how he sees it playing out, what his thesis is in the fund, and yeah, that is the majority of the conversation there, amongst other things. Rob,
let's talk more about the market. I think we've had a bunch of fascinating takes so far, and we've talked about USDH plenty. But I am curious to wrap it up with Ryan.
Yeah, I mean, that's what I was saying. Like, it was. That's why I wanted to give the Hyperliquid points story, because I feel like a lot of people struggled.
Oh yeah,
with that, like a lot of people missed that, and it was a generational fumble. So,
in hindsight, I think it's just take more opportunities. You know, like don't be so dismissive.
Yeah,
because we did put our best foot forward. It's not like, you know, we just straight up said no. It's just at the time, it's same thing that's going on now. There's so many opportunities at play at any given moment.
Well, I put out this tweet. It was like, dude, there's you know it's a bull market when there's like, what was the tweet? I was like, you know it's a bull market when there's a dozen different things happening in each sector of the market and you can't really keep up. Like that's right now.
It's always like that. It's not just bull markets though. 2023 was the same thing.
Kinda.
But why else did we not do a Hyperliquid points program? Like, I think it's just at a certain point, it's a little bit of ego just to think like, oh, we don't need this, you know.
Oh, we just didn't know what it was. It didn't have any hype. It wasn't exciting. I mean, it was, but like, it was like, bro, we had been through the experiences of GMX, DYDX, and all the other perp dexes. And to us, it was just another perp dex.
Yeah.
And this has obviously changed dramatically since, you know, the 6 months prior to launch, into launch, and further. But like, man, like that, like perp dexes were not cool in the bear market because they didn't generate any revenue. There was no this buyback kind of thing going on other than Rollup, and nobody really cared. Yeah, Rollup.
I remember Rollup. Obviously, a very different mechanism for generating revenue, but they did help spur the whole buyback meta. Pretty funny to think about because that was OG. Not even OG. I mean, that was 2023, maybe. Yeah, probably late 2023.
Yeah.
And it did quite well because they were generating revenue. But then again, I mean, it gets back to the point of the perpetuals exchanges were not generating revenue in the bear market because there was low volatility. There was low volume.
Alrighty, guys. I think we're just getting Ryan set up in the back, and then he will be our final guest of today's stream. Looking forward to chatting with him and about his thesis and more. And yeah, should be a fun one. I'm not exactly sure what the tech stuff is going on in the back, but it's classic streaming, guys. We're streaming daily at this point. We got a team in the back producing the show, as well as producing the actual guests, as well as the post-production, the clipping. It's a big undertaking here. So appreciate you guys rocking with us through the stream.
Oh yeah, you guys rock. We might get creative with some of these mechanisms. I think there's a lot of very cool creative things that are on the docket as far as two-way interactions are concerned.
Yeah. Dude, the thread, I was editing the thread. A little taste if you guys are listening. Big stuff on Friday. Big announcements, a little tune-up. I have a banger thread explaining from our perspective the stream lore and how it all kind of played out, written by our creative strategist, Zachary, who I'm gonna take a biz trip out to Hawaii with, Rob. Just a heads up. I think he's gonna come out on Wednesday. Be a little like a little Amex bill for the boys. just put two tweakers in the room together and see what we can come up with?
Oh my
That'd be
goodness.
Come on, that'd be fun.
That'll be great. I have FOMO.
I know. You're just gonna be hanging at home streaming.
I'll be streaming.
I mean, I'll be streaming too.
Man, I wouldn't want to be a brain cell in that room.
No, it's gonna be firing. I'll tell you that.
That's for sure.
It's gonna be firing.
A Zin. I wouldn't want to be a Zin. I don't know. There's something I'm trying to get to. I'm just not sure what it is.
You wouldn't want to be a stimmy in that room.
No, there you go. That might be it.
I'm not even on any stimmies, just some caffeine.
Each other's stimmy.
Yeah.
Okay.
Zach just texted in the chat, said 2 tweakers in a dream. Yes, sir. Yes, sir. That's right. Yeah, man. So I also just got really good news from Token today. Hopefully that we're gonna be able to do something there. Locked in as a speaker for KBW.
Congrats,
and got some good
brother.
And then Token should be good. We got Arthur Hayes booked. We got Palo booked. We got a couple other sick speakers booked in person and virtual. So I'm stoking on both of those. And yeah, still trying to lock down that Dev Connect event setup, but that's going to be exciting. And then if you guys are going to, if anyone's watching this and going to SmartCon in New York City, Chainlink is hosting an epic institutional event, and it should be super, super great. And so we'll be doing live streaming from that. And then I think we're locked in. I don't know, what's the status of the DevCon stream? Is that happening, or what's the
follow up?
Yeah, okay.
We've got EF alignment happening, which is very cool to see. We had Tomash on the stream last week.
Yep.
I think we're going to have some more Ethereum Foundation members on the stream coming up. We're going to have to follow up, get those guys booked, which can be very exciting. Obviously, Ethereum doing big things. No surprise, no
Do
doubt.
we think ETH's going to 10K by the end of the year or no?
I think this gets back to like how we're thinking about cycles.
Okay. So I think it's possible, but that would be an insane run in 4 months.
Oh, 10K by the end of the year.
Yeah. But what's the rush, right? Like there's just no rush. Like I was surfing with Nick yesterday, right? And we were just talking about kind of the cycle and stuff. And we're like, man, the dream would just be a slow, steady climb. You know, it would just be the dream. Just a steady super cycle climb.
If you were president of the United States, isn't that what you would want to do with the economy? Wouldn't you
slowly super cycle it?
You would basically want to start at point A. And if you need to tank it right off the bat with tariffs and market manipulation, you might do that, right? So you have a strong foundation, a basis.
Yeah.
But then after you do that, wouldn't the best possible thing for sentiment and your citizens or community just steady climb? Just this reminds me of an episode
Go ahead.
Reminds me of an episode of How I Met Your Mother. It was a guy talking about how to build the right party playlist, and it was basically crescendo and don't ever stop the entire night. Just continue to build and build and build and build, and you never have a come down.
Yeah. Now
if
the problem with that is
wouldn't you want to do that with the economy?
As soon as you get these types of like backstops in markets and such, people just want to take more and more risk, and it just becomes the people that take more and more risk and then get rewarded for it incentivize other people to take more and more risk. And that's why you see alt season. That's why you see tokens go crazy at the end of the risk curve. That's why you get the Bitcoin, ETH, altcoin kind of flows that go all the way back to secrets of crypto in 2017. I mean, it's been a journey to kind of understand how that flow happens. And it just, that's why we don't get the super cycle. We get like these like slow, and then we get this freaking parabolic finish because everyone gets fired up.
I'd imagine there's a way or a system to control the leverage such that you basically you do grow the leverage, but we're also printing money. So you can kind of think about like those two scales, and if you balance those two scales, then like the S&P stocks just go up. Pretty much over time, they just go up because they're generating value, they're providing services, there's money in the system, and we're continuously printing money. And so as long as these things, even if you just think that they maintain their value, just like gold, right? The denominator is going to zero.
Well, yeah, dude, let me throw something your way if you're going to kind of get into that frame of mind. How about this tweet from John Charb, which is, I'm trying to buy a house. It's crazy that gold is now a serious hold for even short to midterm wealth storage, not just long-term. Money I'm setting aside for a large purchase at some point within the next year, a house, is split between T-bills, gold, and BTC. Can't just sit in cash when DXY is negative 10% year to date.
Yeah. Negative 10% year to date.
Yeah.
So why, with that understanding and that basis, that denominator, why couldn't we just have a slow, steady melt up? And there's going to be booms and busts in there. Like people are going to take leverage. People are going to blow up. But even if you just think about something that's not like even like Bitcoin and gold, though, I mean, I guess you can still have like MicroStrategy, sell a bunch of ATMs and get blown up, right? And then obviously you have to unwind all that positions. It's going to have
but like, okay, so we were talking about that with Vance, right? It's like, do you sell your crypto because you think it's going to go down in the future to hold dollars, but the denominator is worthless? I just feel like people accelerate the actual time that it takes for the denominator to become worthless. Like, it's not just like it's going to be a process. You know what I'm saying? Like Trump is purposely pulling DXY down to facilitate better U.S. exports, I believe, is essentially the broad.
I mean, it's kind of the idea. It's the way that all these foreign exchange currencies are linked to one another, right? You want to devalue your own currency so that like you can essentially control the money printer and no one else really can do anything about it.
Yeah.
And
yeah.
So that's real. That's why, asset owners are doing what they're doing. It's also, printing the money is also devaluing. I think that there's something really interesting about this Russian finance minister, claiming that we're devaluing our own debt. Because think about hypothetically.
Yeah, that is a crazy, crazy trip.
Hypothetically, let's say that Trump has secretly accumulated, a lot of Bitcoin, right?
Which they are,
which maybe they have, maybe they are. They're obviously very invested in the crypto economy. But let's say no one knows he's doing it, right? So he doesn't really shock, the market and have people front run. And so he does. He first you want to fill your own bag, right? Before you pump it. And then you devalue the dollar. You print a ton of cash, right? Yeah. Denominator goes to zero. Bitcoin price flies up, and he's sitting on a massive amount of Bitcoin. Then he can turn around and he can say, look, this 35 trillion, okay, sure, we want to pay it off in Bitcoin, and Bitcoin is now 10, 15, 25, 30x higher in dollar terms.
Yeah.
I mean, can you just wipe it away? Like, can you just...
No, but like, if 35 trillion is X today, and the value, the purchasing power of 35 trillion tomorrow is Y, and Y is some number that is like some arbitrary number that is like X minus Z. So there's some decay happening. Then then that math's mathing, man. So you get what I'm saying, right? Like the purchasing power today is 10 and the purchasing power tomorrow is 9. Then you can kind of slowly, wither away the actual
the 35 trillion. That's
like the nominal value of purchasing power of a given item. Right. But all that's going to do is send assets to the super cycle. Like, it's going to just be an absolute just absolute madness, really.
Okay. I think I see what we're getting at, which is that yes, that is happening, but your point is that it's happening slower than everyone else thinks. Like it's slower than people make it come out to be, make it seem. Which I can understand. Like we are printing, and maybe it's a very intentional print that we have going on. Like people, like we are printing not only to finance, government subsidies and these sorts of things and consumer spending and finance these projects, but it's also intentionally printing to devalue the debt.
Which is so bullish for Bitcoin.
Yeah, and Bitcoin is the reserve asset of the crypto economy.
The investment thesis since we got crypto pilled in 2017 has just been like, okay, denominator is going to inflate. Anything scarce is valuable. Like gold, real estate, land. That's why digital art is still kind of like funnily a late stage bull thing, but it works too.
Mm-hmm. Yeah.
Like if you ask Paul, he's always talking about his digital art collection and the value in it.
And so I think there is a possibility that this could slow melt up. And I could buy into the thesis that we get some speculative bursts over the coming 6 months because this leverage cycle builds up based on low rates. People pump a ton of money in. It's easier to do DATs. We have a ton of buying. And then we have these big bust cycles and we have these deleveraging. But that is underpinned by the denominator going to zero and this slow inflationary cycle taking place on a much longer timeline.
Yeah.
So
like, maybe the thesis that you can come to is like, okay, yes, if crypto goes crazy from here, selling to dollars is a worthwhile thing because if Bitcoin goes to 200K, 150, 170, and then let's say it pulls back down to 80 in the future. Look, I'm not trying to be a trader here, but I'm trying to avoid 70% drawdown on the portfolio, which if BTC gets up to a really high amount and then just pulls back down close to 100, you're looking at altcoins getting demolished. And that's okay. But it's like, is the time value of the dollars or like the dry powder that you're holding, as long as that time value is, and you put that into some earning account, like some 4% yield, and you understand that you're at least trying to offset the devaluing while then looking to reallocate at a better time to assets. The problem is just like, how are you going to time that? Like, if you know that this is going to continue to happen, why not just jump on a train and just keep allocating towards assets just to be on that train? Well, the answer is the train has to end at some point, theoretically.
Well, that again gets into like where you want to place your chips. And so I think if you make a poker analogy here, and Vance I think talked a little bit about this, which is that you want to have there's some capital preservation here. And also I think what's really real, and he mentioned this too, is trade after the trade. It's like what are you gonna do? Like there's the time asset and then there's the monetary asset. And the monetary asset, maybe you want to shuffle things around depending on market conditions. Time asset, is a different conversation. But as far as the monetary asset goes, you're invested, you see the denominator, you see what's happening. Where else are you going to put, like, you want to have a capital preservation mindset, right? So that's where your capital base is. But as far as when it comes to growth, if you're playing with house money, where else are you going to go? Unless everything is going up and down at one point,
that's what Vance was saying. He's like, you're never leaving here. Like, what are you going to do? Sell the cycle? It's your last cycle. And then what? It's not like,
where are you going to go?
There's nowhere to go. There's nowhere to hide. I mean, you could hide in other assets if you really wanted, but I mean, we all know where this is going. So, all right, guys, we got Ryan in the back. He's coming up, the co-founder of Syncracy. Stoked to have him on. A lot to talk about today from the Hyperliquid side, the Ethena side, and more. So let's get Ryan up and let's jump on.
Welcome, Ryan. Good to have you.
Yeah, likewise. Thanks for having me on.
Yeah, apologies for some of the setup stuff. It's a full technical operation here, man.
All good.
Yeah, good, man. Good.
Well,
good.
It's exciting times. USDH. We've had, feels like every single proposer to be the issuer of USDH. I think besides two, we haven't had guy from Ethena. We haven't had native markets, but we've heard from 𝘐𝘯𝘵, heard from we've heard from essentially all the rest. You're very involved in the Hyperliquid ecosystem as well. So just to open up, you're not putting forward a proposal yourself, at least not that I'm aware of. But how do you view this landscape, and what are your initial impressions and thoughts here?
I mean, if people want to give me all the interest revenue for a stablecoin, I'm happy to do that.
They're gonna want it. 100% revenue shares, table stakes, Ryan.
Right? Yeah. No, I think it's incredible. I mean, it came out of nowhere. So for a long time, one thing that I thought Hyperliquid could do is create their own stablecoin. It's kind of like low-hanging fruit. There's all this USDC on the platform, and even like at the end of December, I think it was one of the first times I tweeted this out. They already had like a couple $2 billion there, and it's just sitting there doing nothing. It's earning no yield, and it's actually quite easy, I think, to just like replace it. But there was just no reason to do it. Like it wasn't really that big of it wouldn't have been that big of a revenue boost at the time. I think at the time would have maybe been like incremental like $50 million. And Hyperliquid was already making well over like $200-300 million just from the perps exchange, and that was like the most important thing to do. But now that we're getting to a stage in, I think, the growth of Hyperliquid where it can start to think about this more, and also where there's just way more stablecoins on the platform, I think now is the time to start considering what to do with this product. And it's a very synergistic product to an exchange. So even if you just look at Circle's USDC as an example, one of the biggest criticisms that I think many of like the natives had of Circle going into IPO is that they're giving up so much of the interest income to Coinbase. Now it's like a big criticism, like, oh, the margins are compressing and this is going to be such a dud when it goes public. And obviously it just behaved the opposite. But I don't think that substantively that take was wrong. And really what I'm getting at here is that exchanges are the biggest distributors of stablecoins. And I think Hyperliquid is no different. And I think now we're kind of seeing Hyperliquid really start to just kind of put its like strongest foot forward and demonstrate the power that it's now having in an ecosystem and just going after this opportunity. So yeah, I think it's very exciting. And I mean, at this point, like literally every single stablecoin issuer, with the exception of Tether and USDC, have come to the table to win this, and it's been an absolute show.
Man, and I put a screenshot of CL207's quote tweet of John Van Eck saying, "Hey man, I own 1.5 billion in our validator, or whatever it is. Could you please speak to me in a language I understand, like meow or something like that?" And then you got Moon Overlord in the comments saying, "Oh, I don't like his attitude, thumbs down." And it's just like, it's just complete flipping of power, truly. I mean, you've got some of the largest institutional players in the space basically coming in to lobby to essentially what is like hyper on-chain DeFi giga whales now as a result of the airdrop and as a result of the success of Hyperliquid. Just taking a quick step back, Ryan, with your involvement in Hyperliquid, curious kind of like what your personal and Syncracy's capital involvement is in the Hyperliquid ecosystem, and kind of just generally your Hyperliquid thesis, as I know that you've been involved quite a bit early on, and then we can get into some of the nitty gritty of some of these proposals and that stuff.
Yeah, so we've been it's like longtime supporters of Hyperliquid. Sunny or DeFi Monk, who's on our team, had covered Hyperliquid for well before it even launched the Hype token. We at a fund level bought Hype on the first day and have been holders since. And we haven't made any additional investments in the ecosystem. I think we're generally very patient and methodical about how we build exposure. And I just don't think that there's been opportunities to do that so far. But yeah, it's one of our largest holdings. And yeah, so that's like how we just think about Hyperliquid and our exposure as a whole. For me, this proposal, we haven't officially endorsed any of the proposals, and part of it is just me waiting to see what all those would be. Guy just came out today with his proposal for Ethena, and I think that one kind of shook up the landscape of proposals. So we're taking our time, and I think over the course of the past couple of days since we started to get trickle these in, what I really started to laser in on is what is the most important thing that the community needs to consider when evaluating these proposals. And for us, it's really about alignment, because there's so many teams that have come to the table. They're all proposing the same thing. We're going to be a Genius compliant stablecoin. We're going to pass back all the revenue to token holders, right? That just doesn't make a difference at this point. And I think the number one thing is we want to make sure that whoever is building the stablecoin, this is going to be their number one priority, and that they're going to be here in the next few years as we look to scale this ecosystem. So yeah, I'll pause there, but that's kind of like the most important thing that we've identified so far.
Yeah.
And I think you've outlined this, right? You sort of articulated this, like, who is going to be the best steward for USDH. And so, you know, I think we've seen a couple of proposals sort of allude to how they could build USDH into a legitimate stablecoin beyond Hyperliquid's ecosystem. The most compelling, or one of the most compelling that I saw, was the Agora proposal and how they could leverage Rain and the debit card issuer to sort of implement USDH into Visa. And there could be some network effects there to massage it into the rest of the ecosystem. Aside from that, how else do you think any of these proposals, what would stick out to you as, okay, yeah, that is a legitimate way of building some USDH adoption outside of Hyperliquid?
Yeah. So I actually don't think building adoption outside Hyperliquid is the biggest priority. I think the sequencing of how, or I think it is like an end goal, but the sequencing of you get there matters. So I think phase one, for lack of better words, is just getting this new stablecoin adopted within the Hyperliquid ecosystem. So then a day, like what we're bidding for is just a ticker. And once you get the ticker, you have to go and get the stablecoin adopted. There's no promise from the Hyperliquid Labs team that they're instantly going to add USDH pairs for the spot markets, or it's going to be USDH as collateral on Hypercore, or any of that, right? You need to actually go and get this stablecoin to scale, and then get it to a point where the Hyperliquid Labs team would even consider wanting to put this in Hypercore. So I think like what I would do is I would be most focused on who is going to be supporting Hit3 markets, who's working with like the Builder Codes ecosystem, who is tapped in with all the leading projects in the Hyper EVM to get stablecoins onto that platform. Lending rates are still, so bar rates are still way too high there. And all these things I think would be like the number one priority as far as just, and what would be the most immediately accretive to the ecosystem, right? So building financial products around the stablecoins and actually working with all the people, all the builders in the ecosystem to get this adopted.
Yeah, man. I mean, I think this is a big part of this is a big part of the future of Hyperliquid's growth trajectory, right? Is this stablecoin part? I mean, somebody put out a tweet saying that basically, you know, the best businesses in crypto are exchanges / trading and stablecoins currently, and maybe one other. And it seems like Hyperliquid's kind of coming together to put these all into one. We had Vance Spencer of Framework on to start the stream off today, and he spoke about Hyperliquid's potential path to, you know, $100, $200, even $500, and kind of wrote that, or, you know, kind of stated that this stablecoin could be a big part of that path, in addition to growing perps volumes. When you're thinking about the future of Hype, the asset, as well as the protocol, how important do you think this stablecoin is going to be to driving more flows into it? You know, do you agree with Vance that this is a very strong part of its next leg of growth into a higher multiple? And how do you kind of think about this stablecoin part of the platform leading to its rise in, you know, $100, $200, $300, $400, et cetera?
Yeah, so agree with Vance and his bullishness. I agree with, I think it was someone from Dragonfly who originally put out that tweet about how the biggest businesses in crypto are exchanges, stablecoins, and smart contract platforms, and totally agree with that framing as well. Historically, we have not seen these three businesses bundled. And I think that is what is like a big opportunity, because if you can bundle all these businesses and you can align all these businesses economically with one single asset, then you could potentially, if you get this to scale and it's competitive in all three of those categories, and I think these categories are very synergistic, as I said, exchanges distribute stablecoins, blockchains are the settlement rails for stablecoins and trading. If you can get these to scale, then you can have probably the largest buybacks of any protocol or platform in the ecosystem. And already today, you see that Hyperliquid is doing more buybacks or generating more protocol revenue than any other smart contract platform in the world, inclusive of Ethereum, Solana. And that is more or less just with the perpetual swaps volumes that it's getting and the growing spot markets, and nothing to do with stablecoins yet. And this is also pre-HIP3, which I think will be expansionary, because you're not only going to have just existing, Bitcoin, Ethereum, Sol markets that are driving a lot of volume with different collateral types, but you'll also have potentially US equities, pre-IPO startups, all these new asset classes that currently just don't have, even just outside the crypto economy, this perpetual swap instrument to trade them. And I think that is like a very exciting greenfield opportunity. It also helps Hyperliquid get to a stage of its growth where it's also not as tied to the crypto economy anymore, because crypto can go down 50% in the next month, and then all of a sudden maybe we're cooked for 6 months, and then all of a sudden volumes fall off a cliff and our revenues are down. But I can be pretty confident that equity volumes will be more stable than crypto volumes, right? So I think it is important just to kind of diversify the revenue mix as well, and that's why I think the HIP3 stuff is important. So when I think about the way that the stablecoin fits into this picture, it's like, once again, is another revenue stream for Hyperliquid, and then two, it's like a huge driver of the buybacks that, like I said, just already are at a scale that is outpacing everyone else. And I think this just supercharges it. And maybe the one last thing I would say too, and this is something I've been thinking a lot about recently, because this wasn't in the original Hyperliquid thesis we wrote, is that Hyperliquid has a very unique point of view on how to build an ecosystem. So if you think about historically, there's like 2 different ways to build an ecosystem, and this is a little bit reductive, but there's like the fully integrated. There's like there's maybe the Ethereum's vision, where you just have the smart contract platform, and then a bunch of third-party teams go out and build everything, right? And then there's this fully vertically integrated version of like an app chain. I think of, although it wasn't successful, like something like Canto, or think of maybe like a Bearer chain, where like the core team actually builds these core primitives of stablecoins and trading all under one roof. And Hyperliquid is kind of this interesting in between, where it is intentional in the same way that a Bearer chain or Canto would be, and that it's saying we only want to have one Hyperliquid stablecoin and one Hyperliquid exchange. These are enshrined into the protocol, but it's not the core team that is building out those features. These are third-party teams. And initially for a unit, that was not an open process to decide who's going to build the spot markets. But now for the stablecoin, it is an open process. So you get to tap into the community and see what everyone can bring to the table. And you do get the petition, but you get also you get the benefits of this efficiency and this like intentionality of just having like a single product for the entire ecosystem to coordinate around. And that is I think a really interesting way of methodically building an ecosystem from scratch, because these are, as we know, like extremely important primitives. These are extremely cash generative primitives. And if you can intentionally roll these out, then I think you can build not just like an amazing ecosystem, but you get a ton of buybacks for the token. And I think that's like what Hyperliquid is doing.
So in your original,
I think what you're talking about from the purpose-built app chain perspective, and now they've been able to expand that, especially as they've gotten network effects with the amount of liquidity and volume and adoption that they have. They've been able to now incentivize other teams to come in and build out other core primitives and functionality. And now they're starting to go beyond perpetuals exchanges and start to build into more product lines that they're going to bring, under this umbrella, and it's all going to kind of flywheel through Hyperliquid. Starting from the perpetuals piece, because we were talking about this before, we were actually going back and through our chat, the Hyperliquid team back in 2023, we sort of faded the points program because we were like, look, like perpetuals exchanges have been done before, Apex and like some of these other ones. Like, why do you think Hyperliquid had why was it a 0 to 1? Because at the beginning it was just a perpetuals exchange but they were able to build such a robust ecosystem around it. What do you think they did differently that other perpetuals exchanges didn't? And what made them so successful early on that it spurred this monumental growth?
Yeah, so I think it's a handful of things. So for one, many of the early perps exchange were constrained not only by technology, like it just was hard to build a chain with that level of performance, even if you were to have just a small number of validators, but they're also constrained philosophically, because I think many of the early builders in the space had this hard line on decentralization, right? There's a certain way you're supposed to build a product. If you look at all of the core printers we built in the past, whether it be perps exchanges or spot markets or stablecoins, like what was it? It was like decentralized stablecoins. It was AMMs. It was like, an L2 with some, really complicated proving mechanism that is the perps exchange. And that's great if you want to adhere to a certain set of principles, but it's not great if you want to build the best product. And I think what it took is a shift in the culture of this industry that took place over the course of many years for someone to come along and even have the confidence that to build this and that people would actually want to use it. So that was one. It's just shift in culture. And then also like the technology getting to a point where you actually could build one of these products. The second thing is just like the actual timing of it. It's no surprise that I think the Hyperliquid Labs launched the Hype asset after Trump won the election. I don't think that this is, I think it would have been like a riskier proposition for this like offshore derivatives exchange to launch a token with buybacks before that happened. So it's like hard to separate that from this. And at the same time, like I think having a more accommodative regulatory environment in America gives it more cover to go out and grow and kind of move with confidence, right? Because these businesses operated in a gray area for a very long time. And not every founder operates in the gray area the same, right? Some people are more careful, some people are more bold. And I do think that is like, it's hard to separate the timing from all this. And then the last thing is just, they just nailed the user experience flat out. And, that one's just like a little bit hard to communicate. It's just something you got to experience for yourself, right? It's just really smooth. It was like one of the few perps exchanges out there where you just deposit once and then you have to pay any more fees to transact. Whereas every single other blockchain, you have to pay every single time you do a transaction. You have to prove something every single time you do a transaction. I think it's just cheaper. Even just look at like the fee tiers versus Binance or any other exchanges. It's just a lot cheaper. And then, like when you actually, then like I said, you had the performance. So the performance that was actually comparable to one of these centralized exchanges, but you can still access it anywhere in the world so long as you have a VPN, right? So those are things that I think really stood out to me. And then maybe one of the last things that I think just the team is just aggressive. So like the first to list assets, they're really creative. They'll list like a pump futures market before it goes live. It'll be the first one to do it. They listed like the Trump futures like way before any other exchange did. And sometimes being first is like the most important thing with these really hot assets where people want to trade.
Yeah, man, I think you raised an incredible point about the U.S. regulatory regime, Trump as well, and we had Vance kind of speak about his view on the stablecoin side of things, which obviously is skewed towards the Sky ecosystem. But I'll kind of ask you the same, which is he framed it as that last thing here on the USDH, and I'd love to get into some of your Ethena stuff as well, as he framed it as USDH doesn't really necessarily need to be a genius compliant US regulated stablecoin. Like that's probably not exactly what the Hyperliquid community really needs. But on the other side, it probably doesn't need to be something like you take it all the way out to like a DAI or a algorithmic stablecoin or a very decentralized kind of like yield bearing, very kind of let's just call it like exotic type of stablecoin. He thought somewhere in the middle, and obviously this lands on USDS for his perspective. Like, what is your take on the type of architecture for USDH stablecoin, given a lot of the features that you've mentioned of Hyperliquid's success? Some of them being, regulatory arbitrage, some of them being the team's aggressiveness and willingness to kind of ship, let's call them exotic products. when it comes to the actual design of USDH, and perhaps this is going into Ethena's proposal, but how do you think about the correct type of stablecoin? And I imagine that there's going to be multiple actually.
So I actually do think it needs to be Genius compliant, and I think it just needs to be no frills, built in the safest way with the most institutional partners. And mind you, that doesn't mean that like the team that's stewarding it needs to be this large institution. For example, the native markets team, they're working with Bridge, just acquired by Stripe, and Bridge will be the issuer of the stablecoin. So you get the best of both worlds, where you do have like the compliance and fiat rails of a Bridge and Stripe, but you do have this native team that's stewarding the protocol, right? So point being is, I do think you need to have like someone who's just not going to fuck this up, right? And why is that important? It's not just important just from reducing the risk that there's a fuck up. It's also important for increasing the confidence so that more people would want to deposit this asset and use it on the platform. Because Hyperliquid, it's getting big, right? I mean, this is like one of the largest exchanges for trading crypto in the world at this point, and it's competitive with like the Binances of the world. And it's also not a guarantee that you can even win over the existing USDC that's on the platform, right? It's not like day one, Jeff is going to snap his fingers and then everyone just converts all their USDC into USDH. I think it'll be a process, and I think that whoever team wins needs to have like an actual coherent plan for how to try to get those over. And I think the Ethena proposal was a great example, where there's going to be a combination of like incentives and all this stuff to kind of get all that stuff over to USDH. So yeah, all to say, I really do think that this is an opportunity to build something that is institutional grade, that has a lot of trust, so that you can actually get more people comfortable with using this platform, which, while we all may like, I just think about meeting one of my friends who works at investment bank. They hear about this decentralized exchange and, all the servers are somewhere offshore in Tokyo. And they're just like, wait, hold up. What is going on here? I think you want something that's just going to be like a positive for the brand as well. Understood.
All right, guys, shifting gears into some of your Ethena thesis, and the thing that I really want to kind of pick on here is that we're going to get a rate cut next week, or in about 7 to 10 days. Jerome Powell's going to come out and we're going to get a rate cut. This is very bullish for speculative behavior in crypto. Kind of what I expect is to see stablecoin yields increase as the desire to borrow stablecoins increases. The lending rates on Aave and Morpho should go up for USDC, USDT, but none other than USDE is the larger, beneficiary here of this design with their kind of funding rate basis trade mechanism. How do you think about Ethena's growth into a rate cutting environment, and kind of walk us through the evolution of the thesis up until now?
Yeah. I think one of the first times I met Guy in, I want to say early 2024, and this was right before Ethena launched. And he told me like exactly what he was going to do, how he's going to get to 5 billion, 10 billion. And he specifically talked about this rate dynamic. He's like, listen, at a certain point, Fed is going to cut rates, right? Crypto will rip, funding will blow out, and the spread between what you get from this USD stablecoin and what you'd get on T-bills is going to be huge. And this is going to be a huge tailwind for us. And I was like, that makes a ton of sense, right? That makes a ton of sense. And now we're kind of at that stage where there's a line of sight to that happening. So I think he's totally right about it. And that's really all there's to say about that. The second thing on like the evolution of the Ethena thesis, I mean, I may have had one idea last week, and then in the past week, he announces that, I mean, another $500+ million pipe into the Ethena DAT. announces an integration with Binance, which is, I think, probably the most important integration in its history, that could add another, couple, maybe few billion, maybe even tens of billions of dollars of supply to the USD stablecoin. He also announced his integration with 𝘱𝘂ETH, right, where they're going to be powering the native stablecoin of 𝘱𝘂ETH so that 𝘱𝘂ETH can offer subsidized user transactions. And then they put out this proposal for Hyperliquid. This is all within the past week, right? So, I mean, these people are just shipping, and it's relentless. I mean, I can only think of maybe just like a couple of founders, inclusive of Jeff from Hyperliquid, that are actually shipping at this pace. And this is just something that I think that people in the crypto economy are not used to, but that you would be more used to if you were in like the normal startup world or like normal world of finance and technology, where there's just like a higher level of professionalism and more competition in some of these areas. So yeah, I mean, much to unpack there without maybe any of those 4 proposals, but yeah, it's a monster in the making.
Do you think part of the reason that crypto is starting to embody more startup culture is because there's more at stake? There's like this competition is more fierce. We're talking about bigger numbers now, and that's why it's drawing in more talent and more competition.
Yeah, I think that's right. I think, yeah, definitely more at stake, bigger economic opportunity, which is one of the reasons why we're seeing this influx of talent. I think that there's regulatory clarity now, which gives builders more confidence to go and take bold risk. And then another key factor here as well is that I actually think many use cases are starting to ascend the S-curve. And now that these products are real and we're not just competing in the narrative wars all day for, why is my shitcoin better than your shitcoin? Like, how do you actually differentiate? You got to go out and do something, right? And at the same time, what is doing something in the context of these core use cases we talk about, whether it be stable coins or tokenization or trading? Yes, it is speaking to all of the crypto natives, but it's also interfacing with large institutions, and both within and outside the crypto economy. And that just takes a certain type of a founder to go and execute that well. Because listen, all the use cases that is listed, this is finance.
Yeah.
Right. This is not like social. This is not some weird. This is finance. You have to go and talk to investment banks. You have to go and talk to asset managers, brokerage platforms, like all these different people, and convince them to use their products, right? And I think that's what's also changing, like the types of talent that are succeeding in this asset class. And also, it's like it's kind of lighting a fire on everyone too. Like, there's this huge land grab that's happening now in crypto, and if you don't have an answer for how you'll be able to compete with some of the large incumbents that are now coming after these core products as well, because once again, it's not just like Ethena is competing with, or Hyperliquid is competing with like other decentralized exchanges, other decentralized stablecoin issuers. They're competing with Robinhood. They're competing with all these big institutions that are coming in, and like these people don't care. The code is open source. Yep. Right. As far as they're concerned, stablecoins are 1% of US M1 money supply. As far as they're concerned, like these decentralized exchanges, and no one's using them on a grand scale. We're just trading coins back and forth. Like, and then there's like maybe $20 to $30 billion of tokenized assets on blockchains. I mean, this is actually like real, like 0th inning of this stuff going up the S curve. Okay. So this has nothing to do with prices, right? This is everything to do with just like where we are in the growth of this asset class. And I think that's the reason why, like I said, there's a fire under people, because you can't just win by winning the narrative wars anymore. Yeah. And not only can you not win, but you probably just won't make any money doing that either. Because there was a point in time where like it didn't even matter if you were winning, you could still pump a token up to $1 billion and cash out and go buy your house in the Hamptons. And that's just not what people can do anymore.
Nope. Yeah, man. I mean, I think you put it extremely well. I call it crypto entering its practical era, which is extremely positive for a handful of projects, and it'll keep contributing to this market bifurcation in terms of performance. And in light of regulatory clarity, institutional appeal, we're moving deeper into this revenue or value territory, real value creation territory, and moving away from DAOs and governance for the sake of it, Fugazi, decentralization, overemphasis on idealism and tribalism and into the real and perhaps albeit unsexy categories of just moving all of finance on chain. And it's just an extremely bullish development for the space as a whole, and equally so for the projects that are contributing it. And so how do I take that eloquent response and turn it degen? Well, I pull up Arthur Hayes' tweet, and he says, with Binance USD listing, ENA fee switch is going to get turned on. That unlocks 500 million of buybacks. Let's fucking go. Ryan Watkins, give us the Ethena bull and bear case. How do we get this thing to 50 bill? What is the max bull case? And what is the bear case for Ethena? Close us out here, man.
Yeah, I think that we're in the beginning stages of creating the next Mag 7 of the crypto economy right now. And for all we talk about market topping, market bottoming, alt season, it's all noise, right? I think what's happening now is this asset class is going to look like, I think, a lot like it has for the past 3 years, to be honest, where there's a select assets that are doing well, and most assets are rationalizing down to zero, which is where they belong. And so then this is not just about Ethena or Hyperliquid. There's a handful of projects that I think, like we said, all the things we talked about where the founders executing, they're building real products, they're growing really fast. Like that is the opportunity, I think, from here on out. So when I think about Ethena, what is the thesis for me is that stablecoins it's one of the few, I think, TAMs that is provably hundreds of billions of dollars today and will be trillions tomorrow. They're the third largest issuer right now. They're the fastest growing by far. They've added about $5 to $6 billion in supply over the past couple of months. And that was really just from the Aave integration, yields just increasing from all the price action on Ethereum. And you're starting to see, I mean, if they can put out all this stuff in this past week where they're talking about, launching an exchange on Hyperliquid and building these products around Hyperliquid and being the native stablecoin and running the stablecoin as a service platform for 𝘱𝘱𝑒TH and getting the integration with Binance. So you can already see the line of sight for them scaling that supply from 12 billion is today to another, 10, 20, $30 billion tomorrow, right? Once again, this is just with like the current opportunity set within the crypto economy. This is not talking about when you get more fintechs that are starting to enable you to click a button and start saving in stablecoins. And I think that Ethena is like really well positioned to be almost like a savings protocol for many almost neobanks as well. So yeah, and then maybe one of the last things too is, and this may be a hot take, but I'm really excited for many of the DATs that correspond to many of these large products as well. I think people are really underestimating. Like I said, there's this speculative incubation period that they're all going through right now, where they trade at a big premium to MNAV, they sell equity, they buy more. All right, that's fun. That's not going to last forever, right? But at this point, you have a material percentage of the supply for many of these large assets and networks that is sitting in these publicly traded companies. What is going to happen from here? I think that they're going to be key players in governance moving forward. So you think about Solana's SIMD 228 proposal, the inflation proposal. If there was a public company that held 10% supply, they probably had a lot of influence in whether or not that proposal goes through, right? I think about the long-term economic implications of if you have like some of these big entities that hold a large chunk of supply on the balance sheets, what can they do with that? Where are they going to deploy that capital? Are they going to deploy it into lending markets? Are they going to deploy it into purse markets? Are they going to deploy it into liquid staking providers? And then what can they do with access to U.S. capital markets, banks, and funds? Like they can borrow money to go and put it on chain, and that could be like a huge driver of growth. And I really think that there are a handful of teams that I think really understand the opportunity here to get institutional capital into the asset class. And yeah, I think that, and also full disclosure, we are investors in the Ethena DAT. But I think the Ethena one is one of them.
Ryan, we wish you a lot of success in the next couple months. I think we're going to have a lot of fun in the crypto market. And I think over the next couple of years, we'll be reminded that it's early. We get too caught up in the cycles and the thoughts and the this and the that. But when you zoom out, it's extremely bullish. And I kind of am closing out this 2-day Hyperliquid special, thinking to myself that we just did all of this, but I think there's a strong chance native markets is just going to take the cake because that's what the community wants. So we will see, guys.
Yeah, Ryan, thanks so much for coming on, man. Would really appreciate you having back on, and we can revisit some of the theses that you laid out here on Hyperliquid and Ethena.
Yeah, 100%. Appreciate the time, guys.
All right, buddy.
Cheers, man. We'll see you next time.
Alrighty, Rob. That does us, man. That does us in real good. That Tuesday, September 9th, the Rollup live stream. Looks like it's hot over there in Florida. It's cloudy.
Bugs flying around.
You got mosquitoes flying around. I need to go to the bathroom, get us some lunch.
I'll challenge your native markets proposal. Even though the poly market has it at 80%, I'm going to go with Ethena.
You really think Athena's going to win? I just cannot see the community wanting to accept anything else other than native markets.
You might be right. I think the odds are in your favor, but
I think the validators are already starting to signal that way as well.
Really?
Yeah. We'll see. Tomorrow we'll cover it in the morning. Guys, thanks for coming out. Awesome stream today. Good job, team. Good job, Rob. Hyperliquid all-time high. IP all-time high. A lot of stuff going on out there. Pump good. Sol looks good.
Ethena looks good.
Ethena looks great. Chainlink looks good.
Dogecoin ETF tomorrow.
Dogecoin.
Or maybe not tomorrow, but soon.
People are still sleeping on TIA. Down under 2. Aave looks good. Even Murad's SPX coin looks good. So, guys, thanks for coming on. See you guys soon. Signing off.